Well, get the day going. Hope you guys are doing great today. Sorry, I feel like I'm a minute late. I've been trying to build lessons this morning, which is fun for me, and it's really one of those. Good morning, Bajoy. It's one of those things where I'm like, okay, what do I ask these guys to do? I say, man, let's annotate. Let's talk about the whys. Let's repeat. Let's always analyze what's going on in our heads so that we can repeat the positives and maybe avoid the negatives. Before we do that, before we get into this, guys, I'm going to share all the pictures I've taken. I've taken good ones, bad ones, and I've just annotated the hell out of the charts for you. But first, we're going to go to forexfactory.com at 8:30. If you were watching, guys, there was a pretty big spike that came off of the market, and that was a byproduct of the news that came out. There was a lot of things being announced. I knew that it was coming, and I was able to make the choice to not trade into it, wait for the market to return to a tradable state, and then see what you can do. Nothing else of concern really at 10 a.m. We have pending home sales, so we'll keep our eyes open, maybe protect a position. And then we are home free until 8:30 a.m. tomorrow. Um, I'm taking good and bad, guys, and this one's in the middle of being good and bad. But what I did is I started annotating, right? I took the perfect trade. I can't find my annotations, and I lost. And then when this one lost, I tried to do the jump in trade because if it's not going down, it's got to be going up. And if this one fails, well, then it's got to turn into a trend trade because of this look. And guys, this is one of those things where it's easy to get wrapped up in a moment rather than taking a step back and looking at the big picture. And one of these things, it is, Jen, it's a whole lot because what happened, and I was trying to do this and it's doing it perfectly for me. I had a strong top that reversed the market, and my reversal was a byproduct of the news. And I took the perfect trend trade, and guys, I would lose this one all day long. And what I was trying to do here is say, okay, well, when this trend trade doesn't work, the market has to go up, right? Because I've got these green triggers and it's going up. So I just jumped in. And then when that one failed, I was like, okay, I could take a couple ticks. No, I'm just going to let it turn into a trend trade. And then when I let it turn into the trend trade, I was like, well, it has to go up because this one didn't work and this one didn't work. And I decided that this one has to work. And sure enough, that one goes down too. And guys, the whole idea was you've got to look and see what's the market doing. Is it coming from areas? Is it turning? Is it doing its thing? Are your rules met? Are your rules not met? Are you starting to emotional trade? And guys, I had a blast with this one. I was like, let me think of everything I've ever done after a loser. And this is everything that I've ever done after a loser. Leave huge risk on a trade trying to make it back. Um, and sometimes you get steamrolled at every entry. But guys, I broke the rules on the momentum, and I did it on purpose. I took it a little early, didn't let the back of the bar clear. Sure enough, it pulls back. I didn't manage it below the reversal bar, so I kept my risk way on a trade that was telling me that it was having trouble and doing the wrong stuff. And I wanted to do that, and I wanted to do it. I wanted you to see how many entries and exits it's possible to have once the emotions kick in. And the reason I did that, everything I do is for a reason, guys. That's why you remember this is an educational room. I'll enter if the rules are met very often. I'll also not enter, or I'll enter if the rules are broken to try to provide a lesson, and I'll talk through everything that I do. The reason I did this is because if I go to my trading plan, I have a checklist. So depending on what your plan is, you should have a checklist for what you're looking for. And what I'm looking for is strong triggers, no terminations in an area inside of triggers because that's my highest chance of success. Broke my rules here. And then not only do you have to have entry rules, you have to have management rules. So I broke my rules on the second entry. I broke my management rules on the second trade. And guys, what it does is it results in this huge loss right off, like starts the day horrible. If this trade doesn't win, and I have the picture for it, This is how my brain tries to go is I had strong triggers and I did have a clear path and I did have a strong top. And guys, I had to pull back to an area inside of triggers, 5 ticks above the highest trigger line. They're going to have to go get me if they want my money. Perfect trade setup. Now I watch because there's nothing I can do. I realize that there's nothing I can do. So I made this picture before I started going crazy. Whoops. And I added this one of the loser. And what I said is my annotations let me know that I did it right. My annotations are telling me, hey, you followed your plan. You had an edge. This is a pattern that wins more than it loses. Sometimes they lose. But you're going to learn to feel good about the losers because you had an edge. And what happens is when you get to this point, how's that for a lot of work for a lesson this morning? When you get to this point where you're like, okay, that wasn't the perfect trade, or that was the perfect trade. That was the ideal pattern. That was the right entry. My stop made sense. If I take this trade 100 times, I'm going to lose 20 to 30 of them, but I'm probably going to win 70 to 80 of them. That's when you stop taking the 5 trades after. You reassess, you go through. Were my rules met? Yes, they were. Okay, let's get on and let's look for the next set of rules. So as we go forward today, nobody's rules are right or wrong. What you're going to find is that everybody has a different trading plan. Give yourself a checklist. Give yourself a checklist to follow, to be able to say, hey, this is what I'm looking for. This is what it looks like. Let me take that trade. And when it's not there, guys, go back and police yourself. When the trade doesn't win, go back and ask yourself, did I really have the right trade? Did I take the right entry? Did I have the right advantages? And what happens is you really start to smooth out the thought process. You learn to trust the idea that this is an awesome look and that sometimes your result is not going to be what your brain tells you it should be. But more often than not, what you're going to find is that the results seem to follow the patterns, guys. And I did this one as well. This was a medium probability trade in crude oil. I was making all the lessons this morning because I want you guys to see that all of this is normal. I had a bad top. I did have strong triggers and I had the potential to break the fib. And guys, there's going to be times where you're going to say, I have so much going for me that I choose to enter the trade anyway. So what I did is I annotated. I broke my rules because of these 3 divergences. This is what I saw that made me replace my rule. And in my head at the time, it makes sense. And I'm like, yes, I can take it with a termination on a large chart. I don't have to follow my rules because this is the look that gets me into the trade. I still had a very high risk entry on a medium probability trade. So now I've got to say to myself, this is what's good. This is what's bad. I'm going to get paid ASAFP. And I'm going to get to 0 loss level because I know through my rules, this is a trade that's less likely to work. This is a trade that's less likely to produce the home run. But because I'm already relying on hope, I've got my home run in there. I'm going to manage the first one. I'm going to get to break even. But then if it really breaks, I'm going to make sure that I do what I have to do. And guys, sure enough, that one failed. Broke rules. Why is Mark talking about all this? He's talking about it because, guys, rules are what we have to keep us safe. Rules should be a description of a pattern that's been proven to win more than it loses. Rules should be testable. They should be repeatable. And when you annotate your charts, and that's really what I wanted to get to today, when you annotate your charts, guys, what you can do every morning, and I still do this every morning, you can go back and you can take a look at what you did yesterday. If you're keeping that spreadsheet, guys, you can look at what you did yesterday. You can ask yourself, what did I do great? And that's what we're looking to repeat each and every day. The great things, the rules following, the awesome entry, the reasonable risk. And you got to ask yourself, what didn't work? Guys, for me, the emotional burst after that first loss didn't work. So I'm like, okay, I need to recognize. I know that my pulse went up, my palms got sweaty, and I may have whispered F these guys when I entered the second trade breaking rules, right? Go back and do this. What keeps you relaxed? What keeps you nervous? This little drill each and every morning, guys, is going to set you up because we all make mistakes every day. Sometimes we don't know we're making them. I'll tell you guys right now, this whole lesson this morning is a byproduct of what I did yesterday in the market. I let the small chart talk me into, I'm going to say 4 trades. Um, and I was seduced by the siren song of the small chart, and I ignored the challenges on the large chart because I believed that they owed me one. And it's just simulator stuff, building lessons, but that's a very common thing to happen. I didn't have a clear breakout, but I tried to anticipate the breakout because the small chart looked good. So when I went back and looked at those, what it did, it created this awesome lesson for me as I come into the day where I say, okay, yesterday I got a little wayward. Yesterday I got a little sideways. I formed a couple opinions. Today I'm going to refocus. Yesterday is gone. The lessons are amazing. Now I'm going to get back to looking for momentum, clear path, and entry area. And that's what we're going to do today, guys. Live charts. I'm loving the new format. I hope you guys are loving it too. But everything that we're doing today, guys, when we look at a large chart, the first thing we're going to look for is momentum. That's the first rule. It's a separation between the small and large triggers. That's all it is. It's a gap. Everything is green, small's above the large, space between large or wide. Looks like scissors open. This is going to be rule number one, guys, because when rule number one is met, the odds are favorable for the market to continue. So every trade you look for, let's look for momentum. The second one is a clear path. We're going to be triggers counters. This is my favorite picture in 6 years of teaching this class, guys. When price reaches an area, I'm looking for a short trade, I'm looking for a long trade. I'm going to count the triggers that have made it through the area. So if no triggers go through, my assumption, not my prediction, but my assumption is that that area is going to hold, and any trades that I take going into that area are more likely to lose than win. If 2 triggers are through, I might take a shot at what we call a medium probability trade, meaning that the area, the potential is there for it to break, but it's still not likely. Only 2, my small triggers have made it through. But guys, when 3 or more triggers go through, that's when you start seeing those good breakouts. That's when you start seeing that continuation, and the likelihood goes up. When you go back to the crude oil trade that I broke my rules on, you'll notice that only 2 triggers are through as well. Didn't realize that until I went back and did a little study. So I'm going to come back and not use a red one, and I'm going to re-annotate this chart that's going in my spreadsheet, and I'm going to say only 2 triggers and a bad top. This one was less likely to win. Focus on trigger count. And now I've given myself something to work for towards the day. So that's kind of where I wanted to get at on the morning, guys. This is what we're going to do. We're going to look at the 3 advantages every time. I'm not telling you what to do or when to trade, but if you start talking to yourself about these advantages, every time you take a trade, do I have momentum? Is there a clear path? Counting triggers. Can I define my entry, guys? If you can have all 3, you have a high probability trade. You have a trade that typically wins 70 to 80% of the time. If one of your advantages are gone, and it doesn't matter which one it is, if one of your advantages are gone, it's no longer a high probability trade. It's a medium probability trade. When you start forfeiting multiple advantages, guys, when you start giving up momentum and path, let that small chart talk you into something. When you have 2 out of 3 gone, it's low probability, and the market's going to let you get lucky just enough to make you believe you're really, really good at this, and then the second you go live, it typically stomps you. So you control the entry, guys. You're the only one in control of the mouse. You're the only person that makes the decisions. So when you know what's working for you and against you, it's going to help you make decisions, not only on entering the market, following the plan, the checklist, but how aggressively you may need to manage it. If I've got the strongest trade ever, guys, this is where I look for the bigger moves. If I have a medium probability trade, I manage assertively. I take quick profits. I get to a zero loss level. If I have a low probability trade, this is the one where when you knowingly break all your rules, you leave huge stops because the entire trade is rooted in hope anyway. You have ridiculous targets, and it's these low probability trades that love to suck money right out of an account. So momentum and path leads the way. Large chart, that's the first thing we're going to look for on everything that we look for because that's my new favorite picture. There's momentum and path. Hard to stop it until you hit a mountain. All right, so let's go to the live markets. Smalls have closed the gap, but one of my triggers is still outside. That's a pretty good look. I've got momentum. 3 of my triggers have broken through the fib. One of my triggers is lollygagging. And guys, there was a quick little pullback right to support, right inside the triggers. And some of you are in a trend trade in crude oil right now, and you're saying to yourself, here's the first spot that could create a bounce. What an awesome spot to get paid, to get to a zero loss level, because it's not the perfect trade. Does that make sense, guys? That's after the fact. I already missed it. I was talking to you guys, but that little tail, that's your pullback, and it hits an area inside of triggers. This is actually a pretty good recipe for a trade. Let's see what this one did. This is the Russell. I accidentally opened it, but I thought I would go ahead and see if it follows rules too. This one had momentum. The path was clear. Missed the midband by a tick or two, but sure enough, off it went. And now the small triggers are down, but the large triggers are not. Guys, what we see right here is what we call the gap theory. If price reaches a midband and the large triggers are above the reversal bar marker, guys, price very often, not always, but very often, comes back and closes the gap to those triggers. That's why we call it the gap theory. That's what identifies your midband as a termination condition, which means if you tried this short, you're fighting the gap to the large triggers. If you tried it again, you're still fighting the gap to the large triggers. You don't even have the momentum you need to push it down, not yet. So the gap theory isn't necessarily a, hey, let's go long look. It's a, all right, any shorts between here and here are very likely to get run over because this is a pattern that happens all day long. When price hits something, the large triggers don't follow. Price very often sucks the gap, fills it, does it again right here. Let's see if we can find a few gap theories today. Right off that mid-band, closes the gap right to the large triggers. Does that make sense, everybody? This is just a pattern. It's a pattern that tends to repeat itself. It's a pattern that you can recognize. And it's a pattern that you can use maybe to keep you out of trades, give you a higher chance of winning. Guys, the S&P is scrambling. They're trying so hard to get something done, but they're stuck. Look at this. They're just stuck. I do have strong small triggers. My large triggers are flat and lifeless, which means that I don't have the momentum that I'm looking for. Not yet. It'll probably sort out. Market opens in 10 minutes. Maybe they've got some giddy up plan. So that's the majority of the class, guys. We're going to talk about momentum, and we're going to talk about path, and we're going to see if we had those great high probability trend trade entries. All of our chart reads will start on the large chart. Large chart leads the way, guys. Large chart is going to define the direction, the momentum, and the areas. So every time I have a large chart, I'm going to say, is the background green or red? Is it up? Is it down? If it's up, I'm only looking to go up with it. If it's down, I'm only looking to go down with it. I'm going to check the large chart for momentum. I'm going to check the large chart for areas. And if the large chart says, Mark, it's perfect, then I'll go to the small chart and look for an entry. I want you to think of the large chart as the large crowd. These are the men and women that move the market, that really create momentum, that establish trends, guys. And the large crowd typically wins. The small crowd, these are my fighters, and they push right back to areas inside of triggers. That's typically where they fail when the large crowd has its advantages. Your rule number 3 for the trend trade is designed to help you find that entry, to pinpoint where the market is most likely to continue. The road to entry goes through momentum and making sure that you've at least got a chance for that area to break if the area is not clear. We're going, right? We are talking, we are moving, we are doing, and there we go. Couple divergences, still not broken. Guys, you're looking at decisions being made right at a key area. You're looking at the buyers and sellers fighting right at a key Fibonacci area. That trigger count, that momentum idea, pinpointing entries, is really designed to keep you out of their fight, to keep you looking for the best of the best, guys. And the easiest trades that I've ever taught, the easiest trades that you'll ever take, are going to be the trades that have momentum and nothing in the way. And you're going to buy or sell that pullback to an area and cruise down, buy or sell a pullback to that area and cruise up. We're also going to look at TradingView today. I know we've got a lot of TradingView traders, people coming up, learning the software. Guys, price reaches one-to-ones, a divergence low, a VWAP, a mid-band, a zone, and your triggers are way up here. Absolutely no reason to look for a short into areas that could stop the market. Once they bounce, you guys may find an opportunity to continue, but sometimes, 90% of the time, you're just going to sit on your hands and wait. You're going to sit on your hands and wait for the best of the best, wait for the highest chance. So this classroom revolves around and depends on participation, guys. There is a path to get to where you want to be sooner than later. There is a path to become a confident trader ASAP, and it starts with posting your trades in the room, guys. Post in the room. Show me what you're doing. Tell me what you're doing. Tell me why you did it. Show me where you did it. And what we're going to do is every time you post in the room, we're going to look at momentum. We're going to talk about path, and we're going to look at your entries, guys. My job is to help you read indicators and to help you look at your charts and say, wow, I have an advantage. This is a pattern. This is repeatable. Your job is to learn how to read your charts, to learn those looks for when it's okay to trade. To set a checklist in front of you and say, you know what, I'm going to take it if this happens. If it doesn't happen, I choose not to. Simulate and practice. As a brand new user, one of the greatest things you can do is make mistakes. And then you can make it even better by showing me that trade that didn't work. Because that goes back to the idea, guys, not all great trades win. Not all bad trades lose. So we go back to, did I have momentum? Was there a clear path? Can I define my entry? And if I can, I know that this was my trade. And if it doesn't win, going back and looking at what I wrote on the chart reminds me that I can't always be in the catbird seat. I can't always be the guy taking all the wins. So practice them, drop them in the room. Let's talk about them. If there's something we can do better, I'll give you everything I have in my brain. If there's something that was avoidable, maybe you didn't give yourself the highest chance of success, we'll point it out, we'll talk about it, and then you can put it into your spreadsheet, guys. Your spreadsheet is a place for you to track your trades, but not just your trades. I've modified it, and I'll give it to you right now. This spreadsheet has 4 tabs. The first tab is what it looks like to have the rules met for the high probability trend trade. It's only a high probability trend trade when you add the entry, guys. Until then, momentum through strong triggers and a clear path is really enough for you to build a plan. It's enough for you to build a consistent plan, and you're going to see a lot of people in this room taking advantage of momentum and path. There's a lot of client trades for you guys to look at. You can study, look at what they're doing, defining entries, learning how to manage. A place for you to put your pictures. Guys, fill this thing up. 15 annotated pictures a day should be your goal. At the end of 90 days, you're rocking nearly 1,000 pictures describing market conditions, describing your thought process, and this is how you really build a solid plan. The people that take the most pictures and post in the room the most typically get to where they want to be the fastest. And then trade tracking. This last one, and I've made a mess of mine, so it's a mess on yours, how to annotate for the best feedback, how to get these pictures in here. And then guys, when you take pictures and you take these annotations, you're going to have your whys. I took it because of momentum. I took it because of clear path. I dropped it in the room and I had a conversation with Mark, and Mark said, you know what? That fit every rule. That's a pattern that typically wins more than it loses. What a great trade. And you'll be like, okay, I'm going to take this one no matter what. Sometimes the feedback is going to identify a challenge. Maybe you're trading in determination conditions like I used to. Maybe you're jumping in early and it's creating more risk. Maybe you're jumping in late and it's creating more risk and less room to get to trouble. Whatever it is, my promise to you is that I will give you feedback on every chart posted. Go back every morning and study that feedback, and it will set you up for the day. So the spreadsheet has been dropped in the room, I believe. Please steal it. Please steal it. And then let's see what you guys are posting here. Jen, you have a management question on the chart you just posted. It may or may not support my current conversation. Let's see if it does. So Jen, weak bottom. Smalls got through, large did not. You have strong triggers. There are no terminations. You take the pullback to the area inside of triggers. Your stop makes sense. Your first target looks amazing. Hit target 2 did not get filled. Would you just close the position, Mark, or keep stop at break even? So what I would do, Jen, and what you would do may be different things. For me personally, if they hit my stop and don't fill, I won't leave full risk on a trade. If I'm a couple ticks away, I'm going to tighten up, because what if, right? What if the market comes back? What if the market decides to drop from that weak bottom? Yeah, my goal is to get paid. And we've all had it happen. We've all had our target tapped, not filled, and then hoped. So Jen, go through the Rolodex in your brain. How many times has it not filled your target and taken $100, $150, $200 back? Mine is it almost always seems to go against me because my targets are put at places that could create a bounce. So I personally, I stomp the close button more often than not, or I make it so tight that I should have just stomped the close button. But that's my management plan. My targets are put where the market is most likely to go. When I know that I'm up against a weak bottom, I know the mid band is problematic. Great entry, by the way. So repetition creates a Rolodex, right? Repetition creates this idea in your head. I've seen this before. I know that I'm up against a little bit of a challenge. Let me make sure that I get paid. And Jen does that with quick first profits, right? When it looks like this, take those profits. The second one is all gravy, guys. The second one is all, it's yours. You can't lose. So make a decision based on the situation. So Jen, all right, so let me do this. Based on the situation, the momentum is pretty good, but the triggers are flat, right? We're really riding the small chart momentum, and it's from a bad bottom, which means that the mid band could create a bounce the same way it did here. Do you want to hold and hope? Do you want to get paid and wait? The cool thing is you can always take another trade. You can always get back in the market. You can always find another rules-based entry. The market, I've never seen it flatline in my life. So if you took this trade with only the potential to break, you probably exited with the second divergence. If you didn't exit with the second divergence, I hope you recognize that 3 divergences in the same price range is a small chart termination. Your small chart told you, hey, this area is probably not going to break. Another management opportunity. Management's where the money's made, guys. Not holding and hoping. And the idea behind management is, because my large chart is not perfect, I may need to manage assertively. take quick profits, get to break even. It's not a high probability trend trade. Does that make sense? Because I recognize the challenge here, I'm more aware of the challenges here. Because this isn't a clear path, I'm going to look for things that might mess up that trade. And that's why I encourage you guys, every time you go to a chart, let's get all the drawings off. Every time I go to a chart, what I'm going to do is I'm going to say to myself, do I have strong triggers? And if I answer no, I've got to say, okay, I don't have the momentum that I need to push in the direction of the trade. But then I ask, do I have a clear path? And I say, well, yeah, I do have a clear path. But what I don't have is a clearly defined entry area. Well, now I don't have a clear path because it reached the divergence high. So I don't have momentum. The path isn't clear. I reached the line. All my triggers are below. That pullback to a mid-band simply is not my trade. I'm missing 2/3 of my advantages. My choice is to sit on my hands and do nothing. Here I do have momentum. Well, we're watching it live. There's the open of the market, guys. 2 triggers are through. 2 triggers are below. 3 triggers are through. I have momentum. Holy smokes. It just keeps rolling. My triggers are strong. 3 of them are through the area, and I'm coming from a termination. Now my path is clear. There's my area inside of triggers. Guys, should we see if they want to give us an entry? My rules are met. This is the Russell. Stop will go down here where the market shouldn't go if it's going to be a winner. And of course it tapped me out. And let's see if it fails or if it decides to go up. Protecting my investment with intelligent stops. Pretty cool, right? A lot of you won't trade right off the open. I'm one of those people. Now my triggers are starting to get a little wide. My momentum is still there. But guys, every one of these divergences is a fight from the small crowd. 1, 2, 3 divergences. Huge amount of risk. Guys, it's okay to let it sort out and be perfect. It's all right. But do you see how I did that? There's my momentum. My path is clear. My small chart has a termination on it. I choose not to trade yet. I want it to be better. $10-second stop out. 2 divergences. Manage assertively with a great entry. Good looking stop. Nice trade. So guys, everybody's on board with what we're doing, right? We're going to talk about the live reads all day long, and then we're going to go back to pictures, and we're going to see what you guys did, how you did it, how you feel about it, and just give my 2 cents. So Joel got us going. Notice Joel's using a checklist, right? Odds favorable momentum. Why isn't it a clear path, Joel? Is it these one-to-ones? You don't have to answer. It's a NASDAQ. These big one-to-ones are problematic. 2 triggers through, 2 triggers not through. Pull back to the area inside of triggers, absolutely beautiful entry. Out at the area that could be trouble, protecting assets, and then making a little more money on the way down. Joel, it's an absolutely gorgeous trade. And it's momentum with the potential to break. Great entries create manageable trades. Out at trouble because of the awareness. And then a little extra money. Nicely done, Joel. Great trade. Every trade, we're going to bounce back to those same things over and over. Pete says, check it out. 3 divergences in the same price range. 4th higher divergence coming off a support. The triggers didn't blink. And Pete says, man, my momentum is getting good. Let me get above that darn 32 area that's already created trouble, and I'll ride that momentum up to the next fib. Nice job. Momentum and path. He gets above trouble. He has momentum on both charts. He finds a way to capture funds. Really great trade. All right, Paul. Strong top. Number 1, plus 40, strong top. No odds favorable momentum. Clear path. Rather high risk tight stop, plus 10 only. So, all right, Paul, I want to use this picture because we're going to go back and use it for another example, and you're going to dig this, man. I want you guys to see something, and I'm going to go back to this right here. Risky is an emotion. High risk is an emotion. This is a, oh my gosh, I don't have momentum. This is a scary trade. Let's go through and look at what you do have, Paul. You don't have momentum. You already established that. You've got a clear path, and you have an area inside of triggers that gives you virtually no risk on the trade with your sniper-like entry. Does that make sense? Let me see. You show me a lot of stuff we probably don't need. Let's see if we can make this bigger. So we're going to go back to this very basic idea. What's good? What's bad? So I've got no momentum. It's my smalls are closing, but there's nothing in the way to get to Fibonacci support. So we're rocking 50% over here. Your entry, if you're using the language that goes with the entries, your pullback to an area inside of triggers, Paul, gives you about 5 or 6 ticks of risk on this trade. Does that make sense? Cool. So because it's not high probability, Paul says, I'm going to get paid quickly because this isn't perfect. I'm going to get to break even or take all the profits because I don't have the momentum I need to push down. And sure enough, Paul, look what happens. It goes up. This is the perfect example of how when you know what you're up against, that great entry reduces risk, gives you time to manage. Does that make sense? Awesome trade, dude, and really well managed. Your entry at the area creates minimal risk and gives you time to manage the trade. Now let's look at the other side of it. Let me make this picture not as big. In this picture, the advantage that's missing is the clear path. So only one, medium probability, right, Paul? Have to manage assertively, have to get in, have to take profits. Paul has the strong triggers, right? And that one-to-one is his problem. And he knows it. He says, well, you didn't identify it. We're going to assume that you knew it was there. Trading directly into a termination, but he says, I have momentum, and I have a really nice entry area. So Paul, the lesson here, and the feedback I can give, is if you took that great entry the same way you took it on that previous trade, what you did is you actually had less risk on a trade and you had room to get back to trouble. You had room for profits. You actually make it more likely to lose less if it does fail by taking the great entry. You put profit targets at the 13-2 1-to-1s, the trouble that you were trading into, right? So Paul, if you had traded from the area inside of triggers, you doubled your profit potential back to that trouble. Because you got in late, you had a couple ticks. And you have to ask yourself sometimes, guys, and this goes back to the idea of management. Waiting for it to go in the direction of the trade does not assure you a trade. It could still drop like a ton of bricks. So go through it. If I'm trading into a termination condition, do I want more risk or do I want less risk? Do I want room to manage it back to the termination, or am I comfortable taking 2 or 3 ticks and the only stop that makes sense is down here where the market shouldn't go? So I love this. I saw both your pictures, Paul, and they're great, great lessons. When you identify trouble, guys, it's not high probability anymore. It's okay to take the perfect entry. Give yourself room to manage the trade. Take the small loss if the risky trade doesn't work, rather than creating more risk for yourself in a scenario that already isn't perfect. How do I know it isn't perfect? Well, because every trade I take, I talk through momentum, path, and entry. Great job. Great, great trade. I love this trade, man. If it was a bar fight, it's a pretty easy bar fight to win. And the one thing is, Paul, you didn't mention it, but you also had an HVA right there at the perfect entry to support your entry to take a chance into the... So if you're going to have this chart, man, that chart told you, here it is, Paul. There's your entry, brother. Take it. Keep it low risk. Love it. Great job, man. Thank you for posting that. And then this one, we do the exact same thing, right? I've got the momentum. I'm from a strong bottom, but it's directly into trouble. Paul, no divergence, strong triggers, pulls all the way back to the triggers, but they're not inside. And this one's a little tougher to decipher, right? Because with the space and the triggers, this is one where the confirmation bar doesn't give you any room. You don't really have an area inside a trigger, so it's probably going to pull back more. I like it. You said, I just don't have enough to take this trade. I'm counting my blessings, and I've got a couple, and I'm counting my misgivings, and I've got a couple, and 50% good, 50% bad's not really the direction I want to go. And Paul chooses not to take the trade. I love it. Great job, dude. Great examples of how if you just go back to that core, what's in favor of the trade? What's against the trade? How can I manage it? Where's my risk the least? Guys, you get to this point where you start making decisions that say, I can't find a reason to try to take this trade. I can't find a reason to sit and hold and hope. I don't see enough good versus the bad, and I'm just going to choose to sit out. Awesome job, Paul. Guys, remember that when I look at your charts, and I think this is important for you guys to remember. Sometimes yeah. So Paul, let's address that. Sometimes I feel I'm being too cautious. I've done it. I've talked myself out of winners in the name of caution. So how do you avoid being too cautious? How do you avoid being too reckless? How do you avoid trading all willy-nilly, as the cool kids say? Well, one thing you can do is you can define your trade. No. Paul, try defining your trade and have a checklist. If I have momentum and a clear path in an entry, I'm obligated to take the trade, no matter what my brain says. If I don't have this, it's okay for me to not do it. My caution is not having my rules met, right? So what happens, and I love this, guys. I'm like really well rested today. So Paul, if I don't have momentum, right, and I do have no terminations in an area, am I being too cautious if I don't enter, or am I following my plan? What it does is it pulls my my opinion out of the mix, because it's my opinion that makes me too cautious. It's my opinion that makes me too reckless. Do you have Snag It, Paul? So for Snag It, it's super easy. So I have this picture up, right? And I want to put a checklist or my rules on there. As long as I have a picture of it down here, I can just drop and drag it right in. Boom. So if I put this checklist on there, and of course this picture's way too big, is the market coming from a strong top or bottom? It is. Do I have odds favorable triggers? I don't. Terminations? Oh, my path is clear, and I don't have the entry. Instant police work, right? I've only got 2 out of 4 of my advantages. I choose not to take the trade. That's an avoidable loss. Pretty awesome. That's how it works. I love it. Hey, beautiful.
Have a good day.
You have an amazing day. All right. Got to say goodbye to the old ball and chain. I'm kidding, baby. All right. So Paul, thank you for saying that. It's either your trade or it's not. It's either your trade or it's not, guys. Make a checklist for everything. Put it in front of you. Follow the plan. It's a checklist for a reason. It's rules for a reason. All right, let's see what Pete did here. Pete says, check it out. That termination reversed the market. That's a strong bottom. Decisions were made at key areas and the buyers took over. Large chart, strong bottom, triggers rolled up, separated, odds favorable. And he says it has the potential to break because of the trigger line location. The pullback to the area inside of triggers gets in a little late, tries to take it with confirmation, just misses his first target, and then Pete puts his stop inadvertently right where the market was likely to retrace and pull back to. And he says, man, I forgot to move my stop for my ATM strategy and got stopped out in the wrong spot. And then it's still the trade, it's still the rules. Pete says, two divergences with only the potential. Now I'm going to take that entry where they break above, snap back. I'll get on the good side of everything, and we'll see if that trend trade continues to do what a trend trade does. And it does. Nice job. So there's times where it's appropriate to take the best entry. When you can't find the best entry, clear the trouble. Give yourself a fighting chance. Nicely done, Pete. All goes back to those large chart advantages. All goes back to those large chart advantages. All right, Joel, except for that stop, yeah, we all have brain farts too. So, Joel, odds favorable, and you say you're trading into a term, but you've circled back here on that 50-50, right? So I'm not sure which trade we're talking about. This is the one that Pete just took. Potential to break, and it went right to the termination condition. And once you hit the termination condition, you said that you traded into it because of the momentum, because of the low risk entry, moved stop to break even and took quick profits. Because there was a challenge here, the management became aggressive. Nicely done, Joel. Nicely done. Every time I look at a chart, what's good, what's bad? Well, 173 divergences in the same price range is pretty bad. Flat triggers is no momentum. Guys, this market is hovering in space, trying to find a direction, trying to establish momentum. I don't know what's going to happen. So I'm just going to sit on my hands and wait for it to happen. Look at that. Termination condition for the win. I don't have momentum. I didn't have a clear path. No reason to look for an entry. Does that make sense? We talked about it as it was happening and saying, man, that's just not my trade. And sure enough, wasn't being too cautious, wasn't overthinking, didn't insert my opinion, simply said my rules are not met. I choose not to take the trade. I avoid the loser. Pretty awesome. That's what we do, guys, every day. So let's see if any charts are giving us something. Well, we had one here. Potential to break, pull back to the area inside of triggers, went directly down to the termination. This is the Russell. I don't think anybody's trading it. But there's your medium probability trade, trying to use momentum to break the area. The area doesn't, it's still not broken, and we hit the next wave of trouble. Price reaches a divergence low. None of my triggers are through. This is where I sit on my hands. But if you took this trade, hopefully that's where you got paid. And now you're waiting for the next trade. Same thing, momentum path, guys, momentum and path. Nothing to do. We're right back to that nonsense. So let me scroll up and find some more charts. Let's see what we have. Joel, Paul, Pete, Joel again. Let's see what you're doing, my friend. No clear path. Anything can happen, triggers. Areas below the triggers. Avoidable loss, right? So you were from a strong bottom. All right, Joel, we're going to get you here a little bit, brother. We're going to play the truth in advertising. Joel says, I don't have strong triggers. Joel's checklist has been phoned in. He says he does have strong triggers here. Smalls are not outside of the large on a 50-50. Joel suggested that they were. No divergence on the 5-1. You should be able to mark yes, but you mark no. So, guys, when we talk about avoidable losses, the checklist only works if you're truthful with yourself. The checklist said don't take the trade. Your brain said, you know what, let's take it anyway and hope for the best. I love it. Joel, I love when we see stuff like this because we all do it. If I mark yes on the checklist, it has to be the right trade. Even if I contradict myself with what's actually happening, you're going to believe the thing that gets you into a trade, guys. And it's that little devil on your shoulder. You guys remember the Tom and Jerry? Little devil and angel on the shoulder? Now I have to find the picture. Right here. This one says, follow your checklist. Get into the right trades. Manage them appropriately. This one says, man, why are you doing that? Why are you following the list? You can't get into a trade if you follow a list. So just make yourself believe that the list was good. I love it. I used to love those cartoons. I didn't realize it was going to come back and be a part of my trading plan later. All right, Mr. Woodworth. Let's see what we have, Pete. Great looking large chart, except. I love that. This large chart would be rad, except for the weak top. The triggers are strong. It is a 50-50, and it was that bad top. Guys, this is the same one that I took. Entered in a pullback to the mid-band, got paid, got out. It's not perfect. He identified it wasn't perfect, didn't have the great top, had all the momentum, didn't have a great path, had the entry. So Pete, I want you guys to see how we can go back to this every time. This is not a high probability scenario. Don't have a clear path. Trigger lines are splitting the fib. I do have the best momentum. I had a good looking entry area. Because it's 2 out of 3, you can choose to get paid quickly and cover profits ASAP. And Pete, I think we took the exact same entry. Nope, I got one better than, no, you got one better than me. Dang it. But guys, when you know what you're up against, you know whether or not you need to be a little loosey-goosey, or whether you need to be a little more assertive with your management. Pete knew that it wasn't a good top, and that knocked some of the wind out of his sails. He knew it wasn't a clear path, but he had a low-risk entry and the ability to make quick profits, and he was looking for change on a small chart that might upset the apple cart. Pete, great trade. Awesome management. We'll do one more, and then we'll go back. Oh, Jen, we talked about this one, right? It's your choice to get paid or not. We've got a close button. I don't know. Have you ever, so maybe people don't keep this stat. I never have, Jen. I just have to go off of what I remember. How many times has the market hit my stop, not filled it, and then I've given $150, $200 back, thinking that it's going to go back up and get it again? I don't know what the number is. I don't know what the odds are. I don't know what the percentage is. I might start watching that if it happens a lot. Or I might just say, with this look, they have to come get me. But your stop's in the retracement zone if they do retrace, right? So you start going a little next level. I'm inside the triggers. I'm close to a mid-band. It is break even. Is it better to go ahead and take your profits and re-enter if the rules are met? That's a hard decision to make on the fly. It really is. Pete says, I get in tight because I know I can re-enter the market. I don't know. That's going to be a fun management thing for you to work through. So there was a gentleman that used to show up to my classroom, and he coined this phrase: flat triggers have no boogie. He said it, and it has stuck in my head. Guys, strong triggers have wide, large triggers. When they're thin, when they're flat, the only momentum that you have going for you is the small triggers. When you get to the wrong side of those small triggers, the trade is less likely to work. One of the things you can look at when you're defining momentum, one thing is you will see off a strong top, there will be a moment where the triggers haven't gotten wide yet because they're working on getting wide. That's where I look and see where the market's coming from. If it's coming from a strong top, I know that it's going to take a second. If it's coming from the middle of nowhere, I might force it to go ahead and get that space, to get that width. And you're seeing it again right here, guys. It is literally dancing around these crap triggers. The S&P is telling you, just relax. It's going to get better. It's just not better yet. Termination condition for the win. Pushes all the way to the mid-band 1-to-1s. Ladies and gentlemen, there is your gap theory once again. Remember when we said if price hits the mid-band, large triggers don't follow, it's likely to close the gap? Did anybody get caught in the short trade right here? And if you did, it's okay. Let's talk about it. Let's talk about that gap theory again. I did. I took the trade, guys, when you weren't looking. I had it on the side, and I took the trade. And I said, you know what? I have strong triggers. And I said to myself, it's got to go down because of the strong top. I'll ignore that termination condition, right? And I'm going to say, and I went short right here. And it absolutely slaughtered me all the way up to here. And it was a huge loss. So I'm going to take this picture and I'm going to post it in the room. And I'm going to wait my turn. And then when Mark looks at my picture, he's going to go, oh, let me show you something I'm not sure that you noticed. So when price reaches this 1-to-1, when price reaches that mid-band, well, not only are all the triggers above it, it really is a termination condition, and I see that you notice that, but if you look at the relationship of price to these large triggers, there's a huge gap, and we call this the gap theory, and it's more likely to close it than it is to just arbitrarily continue down. And I'm not saying go long, I'm not saying this is a great long trade because it fights momentum and trend, but what it does is it keeps you from taking this trade, from keeping that enormous loss, and from hoping that the market does something that your indicators say it isn't. So the gap theory is going to keep you out of this loser. It's going to keep you patient a little bit. And if you need a little more study on it, there's about 50 pictures of the gap theory in here. Go back and look at it and look how often this happens. And you'll find that when you don't lose the $300 or $400 here, it makes it easier to capitalize on the profits you're taking when those advantages are present. And guys, that's how the classroom works. So I wanted to do that. And look at this. They're making their decisions after they close the gap. We'll see what they do. There's a part of you that wants to trade the gap theory back to the large triggers, but you're fighting it and sticking to two trades. That's okay. So Jen, let's talk about if I were going to trade the gap theory. I think we talked about this with one of Paul's trades yesterday, or maybe it was John Novak's trade. 34 is where the gap is taken. Right there is where we hit the 1-to-1s in the mid-band. Is there anything, Jen, that says go long? Not really, right? We're left of the triggers. We have odds favorable momentum against the trade. The trend is down. The triggers are down. It's very, very counter trend. Jen, do you remember that lesson? That until you get a close on the correct side of the triggers, it has zero chance of going up. So there's your patience piece. If you're thinking of trading this termination with the large triggers so far away, a close on the correct side of the triggers creates a little bit of an opportunity. Does that make sense? You never got a close on the correct side of the small triggers here, and sure enough, the market continued down. So this one gives me not only a fighting chance, but it also gives me a place to put my stop below that reversal bar. And I would have to go into this trade understanding it's nothing more than a counter trend trade where I get in on the right side of the triggers and hope that it closes that gap. I have to be aware at this mid band. I have to be aware at this fib. I have to be aware at this 1-to-1s. But the same thing is true. Until I get that close on this side of the triggers, it's closing that gap. So I'm not telling you to add a gap, but let me show you guys how I study when it's time for me to study. I'll go back and let's find another gap theory. See if we can find a proper gap theory. So here we go, Jen. We'll do this one. I'm going to circle the very top of it at the gap. So this is my look. It's a bad bottom. We're at the mid band. The gap's in place. Let me go see what that looked like on a smaller, faster chart. So I've already said a close on the correct side might be my entry, right? And whew, it gives me a loser. So is there another way? It's messy. Is there another way? All right. Maybe just arbitrarily fighting momentum isn't the best chance of success. What if I say, okay, let the small chart slow down. And then I'll take that entry, hoping it clears the gap, because here my small triggers are down as well. Maybe it's letting the small triggers roll. Maybe it's waiting for divergence. I don't know. All I'm doing right now, Jen, is I'm building a database. Once again, how do I close that gap? How do I close that gap? Let's find another gap. Can we use this one and just pretend it was a gap? Right at that area, large triggers didn't follow. Let's go back and see if we can find some consistencies. So there's my close on the right side of the triggers. All right, we know that that's usually pretty good. Oh, that's not the gap yet. We're still back here, sorry. The termination is good, right? There's my close on the correct side, and its divergence, and the triggers roll. Maybe an entry once that momentum. So you're going to have to go through, guys, and this is one of the things. If you're thinking, I want to trade the gap, you got to go back and you got to build it up. You got to take those pictures. You've got to look at those advantages. You've got to talk yourself through it. What do I see? How do I make it repeatable? Well, Jen, I've got something to help you with that. There you go in the room. This is how I build my checklists. So for those of you that are trading in determination conditions, build a checklist for what you have to see to trade in determination conditions. For those of you that are just jumping in with momentum, build a checklist for what you have to see to be willing to jump in with momentum. Every time I add a new trade, a new look, a new scenario, guys, I have to make sure it's testable, it's repeatable, that it wins more than it loses, right? So here's my checklist. Here's what it looks like. And if the math, the science turns out true, I'll incorporate this checklist into my plan. So Jen, go through it. If you want to trade that one, go through it. And Pete says when it works, it looks easy, but it fights trend and will lose more often than it wins. Absolutely it will. Absolutely. Because you're fighting trend, you're fighting momentum, you're fighting everything that says the market is going down. It's a counter trend trade. John had a broker years ago, and the broker told him, he called him, he goes, "Hey, Mr. Novak." They were buddies. He goes, "I figured out how to get $1 million in your trading account." And of course, John's like, "Wow, well, how do I do that?" And the broker goes, "I want you to put 3 million into your account, and I want you to go counter trend every chance you get. By the end of the year, you should be down to around 1 million." True story. But there's such an easy way to do it, right, Jen? There's such an easy way to make all the money you ever need to spend. Do you need an aggressive counter trend trade? This is the Jen swims with sharks trade, right? This is the Jen jumps out of a perfectly good airplane trade. This is Jen runs with the bulls in Spain trade. This is your adrenaline trade. It's not your high probability trade. Good stuff. Trying to catch everything trade. Sometimes it's just not my money. I'm okay with that. Some days I think they owe me all the money. That's where I tend to make mistakes. 2 triggers through, not from a strong bottom. 3 triggers through this area. But guys, what do we think? This is the Russell. I have momentum. Don't have a clear path. Don't have a clear path. If I enter here, my risk is astronomical. If I enter down here, well, this chart's probably not good anymore. I've already got a loss of momentum. Can you see how just walking through those 3 advantages, maybe it makes you say, I'm not comfortable, or, and this is your right, I'm only comfortable if they give me an entry from all the way down here, because then I've got room back to the trouble spot, I've got time to manage, and I have the least amount of risk. Does that make sense? Let's go through the 3 things again. I want you guys to be so in line with how I'm talking. I have momentum. You can't see it because it's black. I do not have a clear path. My entry area, I can define it, but the only way I'll take it, I will only enter with the least amount of risk because. Doesn't mean that this is the right entry, guys. But what it means is you're saying, I'm not going to hold and hope. I'm not going to get in and hope things happen that it's telling me aren't going to happen or aren't likely to happen. The only way I'll take this trade is if I can manage my risk. And if I can't manage my risk, I'll just assume it's not my money and I'll wait for the next trade. 2 triggers above, 2 triggers below, divergence, divergence. I have momentum. I've got not even close to a clear path on 3 areas, and I've already lost momentum twice. Some of you want this trade. Some of you feel like because of all of this, they owe you. Some of you are going to say, that doesn't fit my plan. I choose not to take this trade, or I chose to take this one and manage it aggressively. I'll wait for something better. Somebody said the other day that when we do these live reads in the room, it normalizes waiting. When you talk through what's in favor of the trade, what's against the trade, what do I want to do based on my read, based on my rules, based on my checklist, guys, you realize that 90% of your day is being very, very patient. You choose not to take this trade. That's your right. That's the cool thing. It is your right to never enter the market if the market isn't giving you what you need to take a trade. Pete, 2 triggers, 3 triggers through, but losing momentum. There's the first one, easiest to make money. There's the second one, had to get worried about risk. And the third one got run over. 3 divergence. Because it's not the perfect look, quick profits, protect your investment. Great trade, Pete. Is it making sense about going back to 3 things every time you look for a trade? Is it starting to make sense that if I talk about momentum path and entry on every trade that I want to take, if I at least addressed momentum and path, it would set me up to understand how I want to manage the trade or whether I'm even comfortable taking the trade at all. I can't stress this enough, guys. If you need help building a checklist, let me know. We'll do it together. You'll put your annotated charts in. We'll build a checklist. Jen, termination, smalls up, large roll, snap back to the mid band right at the small triggers. Absolutely beautiful, Jen. Absolutely beautiful. Look at your large chart where the entry is too. There's nothing in the way. Your small triggers have rolled. Your small chart is telling you, look, that's odds favorable momentum, Miss Jen. Even your synthetics are turning. Let's see if we can ride it up to the next area. Absolutely awesome execution. We talked about that entry the other day, and you just nailed it. Termination, no triggers through, odds favorable momentum. We're losing momentum. Great entry makes it manageable. So let's see what happens. Loss of momentum. Management for the future. When there's a loss of momentum, take profits. All right. We're going to play broken record today, guys. Gonna play broken record today. Let's clear some of these out so it's a little easier. All right, Miss Jen. Loss of momentum. We're going to get rid of that one. Clear path? Absolutely. Well-defined entry? Beautiful. 2 out of 3. What should I do if it's only 2 out of 3? I should aggressive, get to break even quickly. Because without the momentum to push it down, doesn't it stand to reason that it may not actually push down? My smalls are working back inside. Your great entry creates an opportunity to get paid quickly, to get to break even quickly, in case that momentum is unable to push down. Does that make sense, Jen? Does that make sense to everyone in the room? There's a lot of quiet people in here. Why do I keep going back to these 3 things? Because it lets me know how to manage a trade if one of them's missing. It lets me know that it's okay to skip a trade if it's not right. So I'm really trying to go broken record. Great entries create manageable trades. You were in at 94. It didn't quite make your first target. Even if you didn't make money on this trade, probably no reason to lose money because you know what you're up against. Really nicely done, Miss Jen. And guess what? That's all the pictures, guys. Good job. Let's go to the live market and then let's take a break. Has momentum, doesn't have a clear path. 2 divergences push you right to the stop out. Lose the trade. Loss of advantages. Doesn't mean that the market won't go up, but your small chart told you we're probably going to push down once before we do. There is your 3 divergences, pushed you right to the termination condition. From the termination condition, everything is going back up. The market reversed. We do have a strong bottom, don't have odds favorable momentum, and certainly do not have a clear path yet. So we play if then. If this market continues up, produces the momentum, gives me 3 triggers through that pink line, I'll look for an opportunity. Other people will say, because of this termination, because all of my indicators are green, if it pulls back to an area inside of triggers, I'm willing to take a shot against the termination. Other people will say, I want small and large above it because after a range, this could be a fake out. The buyers might be pushing as hard as they can where the sellers said no 3 times. The sellers might let them get a little higher so they can just get a better price and then crush it to the downside. Have you guys heard that phrase yet? The breakout, fake out? My brother taught me this one. The market has established a line in the sand for both buyers and sellers. The buyers were in control. The sellers fought back. The buyers fought. The sellers fought. The buyers fought. The sellers fought. The buyers are in the midst of fighting. When you see a range-bound market, the sellers have said, this is where we want to go down. The buyers said, this is where we want to go up. So the sellers know that the buyers are fighting. The buyers know that the sellers are fighting. So it stands to reason, the sellers say, we'll let them fight, get just above the area, then unload at a better short price. And the buyers are saying, we'll let them fight. Here, let me just copy that. That'll be easier. Oops. This is what happens when you try to take shortcuts. There we go. At a better long price. And I don't know what's happening while I type this. When you have a 50-50 trade after a consolidation, it is either the longest huge run up and it's amazing, or it's over quick and fails miserably fast. You'll never know which one it's going to be. They cleared it. So the fake out breakout didn't happen, but it can. Now you have odds favorable momentum. Now your path is clear. Your midband is right at the bottom of those triggers, 2 ticks above it. Guys, this is about a 5-tick stop on this trade. Odds favorable momentum. Absolutely nothing in the way. I've got a midband inside of triggers. I will take my entry 2 ticks above it. Hope that they come get me. If they do, my stop, the bottom of the triggers is at 73. My stop will be right around 56. Where the market shouldn't go, 67, $100, $200 in place. Or we can say, you know what? The buyers tried so hard to get out of there. I'll take quick profits. My stop's where the market shouldn't go. We'll let the second one run and we'll see what happens. But if I go back and annotate my chart, I have to say it was an uptrend. I have to say it was strong triggers. I have to say it was a clear path. And I have to say I had a really well-defined entry that offered virtually no risk. So Paul, great questions. Where are termination conditions defined? I'm going to answer your question with a question to make sure that you understand the answer. Where do we define terminations? Small chart or large chart? Do you guys remember that one? I'll help you. It's a large chart thing, right? So, Paul, these are your 5-1 synthetic triggers. So, absolutely. It's the 13-2 large triggers that have to get above the area. It's not the 5-1. We define entries over here. We define direction, momentum, and path on a large chart. This is just an entry chart. That's all it is. When this says you have the advantages you need, we're going to go through and we're going to find an area inside of triggers. We're going to say if it gets below these triggers, I don't want to be in the trade anymore. Does that make sense? This is the ideal setup. And if I were annotating my charts, it would be just like this. Here we go. I have momentum. I have a clear path. I have an entry area. And then just for bonuses, I have a strong bottom. Guys, this is the highest probability trade I could ever take. This is a trade that as I take it, I'm reminding myself. It's a trade that typically wins 70 to 80% of the time. I'm not in control of whether it wins 70 to 80% of the time. I'm in control of my entry. I'm in control of the look. We'll see what happens. After consolidation, I like that it's further above. I love the look of momentum. So now the KISS plan, the plan that's given to you guys every day. I'll drop it in the room again. We're going to go through KISS plan management. If my entry is in an area inside of triggers, then my stop is 4 to 5 ticks below those triggers. This is where the market shouldn't go. So right now, I'm either waiting to be stopped out. It's a normal part of a positive equity curve, or I'm looking for a $100 profit on the first contract. I want to get paid. My goal is to get paid. If I get a reversal bar in the direction of the trade, I'll reduce risk 2 ticks below the reversal bar. Guys, my entry is so good. My risk is about as low as it's going to get. I might save a tick with that approach. After I hit $100, the KISS plan says, go break even and hold for 200. As you grow with the software, you might say, with all this momentum and nothing in the way, I'll hold for a bigger move. And then Paul says, for the textbook, pupils. It's everything you could ever hope for, isn't it, Paul? It's 100% rules met. Pete's in the exact trade. Paul's in the trade. Stops where the market shouldn't go. That got close. We'll see what happens. Where was your stop, Paul? Everybody has a different management plan. Paul's at 64. Paul says, if it makes a reversal bar, I'll be out of the trade. I said, if it gets 4 or 5 ticks below the triggers, that's my KISS plan. That is the most basic remedial plan ever. Paul does what John Novak said. You know what? It's worth a couple extra ticks of risk. I'll force them to create a down bar on this large chart before I'm willing to exit. Paul, I like it. KISS plan says a little higher. Forcing the market to take you out of a position is one of the greatest things when you have the trust to be in that position. Actually, 65 represents 5 ticks below the bottom of the triggers. Let's just let it play out, guys. What do you think? Are there any questions about why we have momentum? Are there any questions about why we're not concerned about the path? Any questions about why the entry was taken 2 ticks above the area inside of triggers? Any questions why I'm not freaking out about being down $80 in this trade? Because I have the best of the best look, guys. They're going to have to come get me if they want my money. I refuse to put my stop too tight with all of these advantages. Win or lose, you take that trade all day, every day. Pete, I would too. If you watch these fluctuations, it'll drive you absolutely nuts. Paul knows that. Paul takes them off. Paul says it's either the trade or it's not the trade. It doesn't matter what's in this box. It's either rules met or it's not. Paul, I like that you do that. Guys, if looking at that P&L kills you, go to your properties. And where it says currency, put none. Stop paying attention to ticks. Focus on the rules, right? Somebody said yesterday when they focus on the money, it creates problems. When they focus on the pattern, it's easier. Wouldn't it be easy to jump out of the perfect trade because you see $100 down? Wouldn't it be easy to say, oh my gosh, this just isn't working. I've decided it's not working. I'm going to exit with a $40 loss. I hope you did, because that's what makes the market rocket in the direction of the trade. And that's exactly what I want to have happen. They're making decisions. That's why we're stalling out. The buyers are at a key spot, and they're saying, this is where we want to go up from. The sellers are saying, well, what do we want to have happen? Maybe we regrouped. Maybe we want it to go down. I don't know what they're thinking. But the pattern is solid. And if we get a reversal bar, we'll take a little risk off. Do you guys want to keep it at 100 and 200? Or do you want to see if with all this momentum and path, they get up towards these areas? Class management. Whoop, there's my reversal bar. Four ticks stop out. 4 ticks below the sense triggers. Got you. Did it, Steve? There's my first target. I'm break even. Guys, it hit 95. That was a $300 trade. So what are we going to do for management? Large chart says up. Large chart says strong. Large chart has absolutely nothing in the way. Small chart is someplace that could create a bounce. But break even is right outside of the high probability trend trade zone. I'm going to hold the trade. I'll put a tick on to cover commissions. Let's see if momentum path carry it, guys. This is how management plans grow. What's good for me? Well, momentum is great. My path is awesome. Everything says up on every chart. But Mark, that's a termination condition. That's not a termination condition, guys. That is one divergence in a line that may create a little challenge. But is one little pink line going to override odds favorable momentum? Not very often. Trailing profit stop out, Pete, 460. I love it. I'm going to trust momentum for a little bit. And look at that, guys. There's a little pivot. 1, 2. Reduce my risk behind the pivot. I've got 70 bucks locked in. I've still got room to the fib. I'm going to get out a couple ticks below because these are areas, guys. And I'd be pretty cool with 6607. Let's see what it does. I've got less risk. I still have every advantage. Every indicator on every chart is rock star status. I don't care what happens. My worst case scenario on this trade is I walk away with $200. My best case scenario is it hits my next target, and let me do math real quick. Closer to 4 or 5, I think. Are you guys following what we're doing here? Guys, this is everything that we teach every day. If you were following the KISS plan, you were out at 95. If you're learning to trust the large chart, you're still in the trade holding for a bigger move. Great entries create awesome trades. Do you guys see how my stop is 2 ticks above support inside of favorable large triggers with the rules met on the large chart? Does that seem like the right place to put a stop? Let's talk about that while we're doing it. My stop is 2 ticks above support inside of favorable large triggers when I have momentum and a clear path on my large chart. Isn't that the entry for a high probability trend trade? Does that make sense, everybody? So this is where you make a decision. If I get one of those closes on the wrong side of the triggers, I'll look for the next entry. They can either get me or not. Maybe I choose to close. Maybe I say, oh, I don't know. You have to make your own. I'll keep it on the reversal bar. If I get that loss of momentum on the small chart, my rules are still met. I'll just look for another entry. And if it doesn't give a reversal bar, guess what? We'll ride the trade. And that is 160, 260. Worst case scenario is a $260 trade. What's my goal as a day trader? Is to get paid. So that money's in the bank. I've got momentum. My path is clear. I've got an area inside of favorable large triggers. Does this fit the rules for an entry? What do you guys think? Momentum, clear path, area inside of triggers. Well, that's another low risk look, isn't it? 2 ticks above is right there. 1, 2, 3, 4, 5 ticks below the triggers. And now we're just doing it again. Momentum, path, pull back to the area inside of triggers. First target is at $100. Second target is at $200. If I get a reversal bar, I'll move my stop behind the reversal bar. If I don't, they're going to come get me. Even if they come get me, they can't undo the profits that I made on this trade. I virtually have nothing to lose, guys. I'm playing with house money right now. First trade produced the winner that I needed. My risk on the second entry is less than what I made on the first trade. Momentum, path, pull back to the area inside of triggers. Let's wait and see what they do. Kind of fun live, isn't it? Is it making sense to you guys? My rules are met, so I placed a trade. No opinions. Guys, my opinion stinks. I'm just going to let you know that right now. My opinion gets me in more trouble. I'm going to take that picture. Whoops. Need a bigger picture. I'm going to take that picture. I'm going to put my checklist on here. Yes, yes, yes. This is my trade. If I were taking this one, yes, yes, yes. And they're dancing, aren't they? Making me nervous, making me sweat, making me fearful, making me anxious. Ah, not at all. I've got every advantage I could ever hope for, guys. This is about as sexy as a trade gets. Now we just need them to fight. I need those buyers. Do the up dance for me. Are there any questions? There's my reversal bar. 2 ticks below it. Now we've got 7 ticks of risk per contract as opposed to the 10. We just saved $60 in risk. If they hit my first target, then I will move my stop to break even and see if they want to hit my second target. And Joel, we'll take a look at yours as soon as we're done managing this one. So what would get me out before target reached? 1, 2. If I had a third divergence, guys, I might pull the plug on this one. I don't have any negative numbers flashing. Right now, I have no threat of divergence. There's no potential. Don't see the numbers flashing. I've already reduced risk. I've still got the advantages on the large chart. I can see the buyers trying. I can see the sellers trying. I'm just going to sit on my hands, guys, and see what happens. This is day trading. My opinion means nothing. The market doesn't care about my position, doesn't care about my car payment, doesn't care about my rent. All right, we're break even. We're break even. Paul, there was no divergence potential. I didn't have any divergence potential at all. Now I have divergence potential. So if this potential becomes true, if I get 3 divergences in the same price range, I'll just mash my close button. But if that doesn't happen, guys, I'm going to 66.07. Those are my only options. I either get paid or a third divergence takes me out of this trade, at which point I relax and I don't do anything else. Have you ever been in a trade so long that you just close it out because you're afraid it's not going to work? Have you ever stared at the money and exited a trade because it made you uncomfortable? Stare at this chart, guys. What does it say? Watch this. We'll see if we can do it before the trade is over. Get rid of that. Get rid of that. Get rid of that. Hold on. I want to see something real quick. Is there any indication that this market is not more likely to go up than down? How's that for a trick? Watch this. Whoa, now it's even more likely to go up. It's odds favorable momentum. And it is a clear path. Still have the divergence potential, guys. We've had it for 4 bars. If I put my stop 2 ticks behind that reversal bar marker, I'll be able to time it out if divergence is true. Let's put the template back on. But Mark, you're up the money. Why don't you take it? But Mark, what if? What if that divergence is true? You could have just gotten out of the trade. Guys, I could have gotten out of the trade 6 ticks ago when the divergence potential was there. Why would I? Odds favorable, clear path. Every indicator on my small chart is pointing north. Pretty cool, right? Yeah, Pete, I've got one of those too. It's fun to hear the cha-ching, especially on a really fast run. So guys, are we going to let the potential of divergence take us out of the perfect trade? Or are we going to force that divergence to be true before we decide to manage? Only you can answer that question. Only you can gauge your tolerances, guys. What's good, what's bad, what makes you feel good about a trade, what makes you feel bad about a trade. But when my large chart looks like this, these mother scratchers have to prove it. I'm not going to trade potential. Create the divergence. I'm willing to exit that trade. If it doesn't happen, they're going to have to go to 07, and then I'll exit the trade. Does anybody have a $300 to $400 trading goal every day? That's your goal? Because you know $400 is 6 figures, right? Did you know that no matter what happens in this trade, you've reached your goal? In 5 minutes of actual work, guys, no matter what happens in this trade, you've already reached your goal. Have you ever said there's just not enough opportunity in the market? There's not enough moves in the market. Guys, if this trade isn't hitting your goal, it means that you formed opinions when your rules weren't met. It means that you took the trades that didn't follow the rules. It means that you gave away money that you shouldn't have given away, because really there hasn't been an opportunity in this market for quite a while. There was one beautiful couple good-looking long trades, and then that was really it that fit the plan. It's what you don't do. I don't have the advantage. I choose not to trade. Why? Because the advantages are coming. Mark, that momentum is going to make it to the area 7 or 8 times out of 10. I agree with you, Paul. Pete says, I'll trail the stop and get it hit. Everybody has a different plan. Paul, I'm with you. With this look on the large chart, something drastic has to happen to get me out of this trade. Why? Because I speak to myself in terms of advantages. And my large chart says momentum and path. Which means I'm more likely to hit 66.07 than I am to hit 65.89. And that's what we call bingo, ladies and gentlemen. And even with my loser, goal met. Any questions? That's where I drop the mic and say, if you're not a lifetime owner, call somebody with a credit card. It's fun to do it live. It's fun to be able to do it live with you guys and talk through the whys, right? Why did I do this? Why am I in here? Why am I not freaking out and moving my stop because of potential? Because my plan says, and now I've got weakness right at a fib, guys. It's time for me to take a break. I'll be back in about 5 minutes, And we'll keep reading charts. We'll keep looking at pictures. If you have questions, if any of this does not make sense to you, do me a favor. Ask the question. I'll be back in 5, guys. Post them if you So I'll pull up some trading view charts real quick while I reload Ninja. What do you guys want to talk about? One thing that I was told yesterday was, hey, Mark, shut up. make them talk. So I'm going to shut up a little bit and make you guys talk. Before I do that, we're going to look at TradingView, guys. TradingView is just another way to do what we do. And here, coming from a term, I'm into a term. I'm going to let the triggers let me know what's going on. My small triggers are up strong. Everything is above the zone. Guys, this is a pullback to a mid band. And really, the rules say if I'm going to take a shot at a trend trade to go up with the large chart, it's that close on the correct side of the triggers. My stop goes below the pivot. And I'll take profits at trouble if it gets there. That's what a trend trade looks like. All the triggers above the zone, room to the next area. Don't fight the 1 minute triggers. Let's see if we can find a way to capitalize on a market that is telling us it's more likely to go up than down. Sorry guys, thank you. Large chart, everything is above the area. Small triggers are strong. Pull back to the mid band, but don't just jump in arbitrarily. Wait for a close on the correct side of the triggers. Guys, this is the TV trend trade. I've got my first target right there at trouble. If I wanted to, I could do the $300 profit thing. Go break even as I get close to it. And just see what happens, right? I could keep my stop where the market shouldn't go. I could try to hold longer. You've got to work your own management plan. I didn't divide anything. I didn't take quick profits on this one like I normally do. It's just a trend trade. Does this make sense for my TV users? Everything's above the area. The triggers are strong. There's room to trouble. Close on the correct side of the triggers. And now the only thing I'm not in control of is whether or not they go up and hit my stop or my target. They either do or they don't. That's the part I don't get to be in control of. One of the things about TradingView, though, is with these minute bars and with these zones, a lot of times you find that there's a little more potential for profit. Risk seems to go down a little bit. I like it a lot, but you have to be more patient than on the Rinkos. You have to wait for that best of the best. Miss Claire, you're one of my trend traders. That makes sense? The whys? I'm up $300 in a trade. Why not go break even? That's a lot of money. Most of us would already be getting paid. I just want to see if it gets to trouble. It may not. I don't know. I'm having a good time watching it. Remember that your market or your account has no idea how the money got there. It doesn't know if you took trend trades, high probability trades, low probability trades. It doesn't know if you took half of your profits, let's say. If this were the KISS plan, half of those profits would be right there. You'd already be out half of a position, right? You'd already be break even. You'd already be looking for that second target. We hit $300 4 or 5 times in this trade. It's okay to get paid. It's all right to take the risk off. We'll let it go. This is fun. What are the chances? We catch 2 trend trades, 3 trend trades in the last 15 minutes. But Mark, there's not enough opportunity in the market. Boy, I really feel like there is. Any of you TradingView folks have any questions about what we just did here? Everything says up. Whoop, well, there we go. Everything says up. Pull back to the mid band. Guys, that was a $400 trade. That was like a $300 trade. Whoops, I did that in my live account too. Oopsie. I guess if the rules are met, the rules are met. I feel like John Novak right now. I'm following rules and catching wins. Pete, here's what yours looked like. Strong bottom, everything rolls. You take the first entry, doesn't get you, misses your stop. You get paid. Trailing stop gets you. Comes back, gives you the exact same trade. Goes up, trailing stop gets you. Pete, on the crude oil trade, you beat me by a tick. I got you on this one, though. Got you on this one. Guys, this is beautiful. Pete didn't need me. That's part of Pete's plan. Joel, everything says up, perfect entry, money, money, perfect entry, money, money. Come on. Does it work? It works. And hey, Joel, truth in advertising, right? Truth in advertising produced a different result for you. I love it. Let me get my account going. And look at that, it bounced right at trouble. What a great place to get paid. Let me take a picture of it. I need to annotate this, right? So what did we see on the large chart? All triggers above support didn't reach 15-minute area. Uptrend. And then why did I enter? Enter on a pull, on a close above fast triggers at the mid band. Profits taken at, well, I guess I took profits at 140 and I took profits at 200 at trouble. And there's your, guys, there's your trend trade for you HVA users. I'm going to take that link, I'm going to drop it into my journal. Click save. And now we go back to waiting, right? Now we go back to waiting for the next trade. I knew where trouble was. I didn't have to sit through it. All right, let's pull up Ninja. Look at those weak triggers right at the fib. Shenanigans, ladies and gentlemen. If you made your money up to trouble, you didn't worry about this. If you didn't make your money up to trouble, you may have had a challenge. Because one of the things that I've always said when teaching the KISS plan is that your stop needs to be 4 or 5 ticks beyond the triggers, right? 4 or 5 ticks beyond the triggers. The trigger lines were at 72. 67 was an appropriate stop. I give it a little extra, personally. Because, guys, these are just moving averages. You may get a little overrun. And the more perfect this large chart is, the more I let it breathe over here. When I say to myself, I have every advantage in the world, let me keep it a little looser. Knowing what you have going for you gives you the ability to manage a little different. And Pete said, I'm going to take this trade with weakness. I'm going to take this trade without a clear path. I'm going to take this trade without an area inside of favorable large triggers. That's Pete's right. Some of you are saying, well, that's not my money. That's not my best look. Those aren't my advantages. Guys, neither of you is wrong. I'm married to a tall brunette. Pete might like blondes. It's just right for us, right? It's just right for us. There's too many opportunities to feel like you have to do something. There's too many trades that show up. There's too many opportunities to make quick profits, to manage assertively. You've just got to find your groove, guys. So let me know what you want to talk about. But we're up, what, 800 on the day? If you count TradingView as well. I'm going to be quiet. All right, back, just hit the target. If large triggers get above the fib on the large chart, nothing but blue sky, Pete says. Well, this is where we have to agree to disagree. I still don't have the momentum that I need to feel like this is a market that's going to scream. This put a lot of confidence in me. This says anything could happen up or down. Oh, nothing but blue skies to the next area, without a doubt. But they've got to get through this one first, right? Got to get through this one first. Jen, which charts? I don't know which ones of yours I didn't see. If you need feedback, I think I've clicked on everything. If you need feedback, let's do it again. Will you repost both of them for me so I don't have to scramble? You're amazing. Thank you for that. All right, Joel. Joel takes... So Joel, you fought direction. You fought momentum. Didn't work out. We've seen this before, right? Joel, when it's not going your direction, it's less likely to win. This one was definitely less likely to win. But once everything starts to roll, after the gap is filled, that's where you get in on the large chart. Still don't have a clear path. And you get stopped out here. I'm trying to figure out where everything is. 63.50. So there's your first long. Without the advantages, doesn't work. And then once you have the advantages, life's pretty easy to get to the target, Joel. I love this because, Joel, you're an amazing trader. You're an awesome trader. And you've made so much progress. And one of the things that you had weeded out was this one. And I feel like because you only talked about the winner, you probably know that you broke your rules on this one. And you got the result that you could expect from a rules break. So this is what we call avoidable losses. And 63.50, I can't see what the entry was. 58. So that's 2.5 points. Is that right? That undid the profits from the good stuff. So, Joel, great trade on the second one. Fits your plan beautifully. Broke your rules on the first one. Correct me if I'm wrong. Didn't work out the way you needed it to. Good stuff, man. All right, Miss Jen. Oh, we did talk about this one, didn't we? All right. Oh, it's too bad you missed this one. Let me know when you're jumping ship, Jen. I'll just hold these until you come back. No, it's okay. Here we go. We'll just go to this one. So a trade is momentum, path, and entry. And you said, I'm losing momentum. So let's cover it up. When momentum is gone, you've got to say, do I have a clear path? Well, absolutely, I do. Life is good. There's nothing in the way. Do I have the entry? Jen, you've got an amazing low-risk entry right at the top of the triggers, right? So 2 out of 3. The idea is that when I have 2 out of 3, I'll manage a bit more aggressive, get paid or to break even a little faster. Does that make sense, Jen? They missed your $100 by a tick. By a tick. Those sons of guns, right? Because I don't have the momentum, that the odds are favorable for it to push down. And you can see that momentum going away on the small chart too, and it's just struggling. It's a good opportunity for you to say, you know what? I don't want to risk anything else on this trade because I'm already losing momentum here, and then divergence prints here, which is even more loss of momentum. It's literally telling you, Jen, we're not sure we want to go down to that fib. Maybe you exit with a divergence. Maybe you get hit break even. But absolutely, I think this is an awesome time to manage. I'm not saying take profits. I'm not saying, you know, start changing your whole strategy and getting paid at 3 ticks instead of 10. But this is your bounce point, right? I don't know that I might have covered commissions and that would have been a good exit. Does that make sense? And the one thing that I'm really trying to do today, guys, is I'm really trying to go back to the idea that when you talk about the three things, when you talk about momentum, path, and entry, I'm going to show you how this works. That is the perfect trend trade, isn't it? No, Jen, I'm glad to, because the more times anybody hears a lesson, the better it sticks. So this is the perfect trend trade. Jen, are you looking for a trend trade here? No, right? This recipe doesn't fit this trade. That's okay. Let me show you some common things. This is a termination condition, which says absolutely no more trade short. So Jen's using the idea, the recipe of a clear path. Get over here. Try to get the black one off of there. Here, I'll just do this. Jen says, you know what? I'm using the lessons from the high probability trend trade to know that I don't need to go short because this is a termination condition. And Jen, you're using your lessons from momentum to say, I have weak triggers at a fib. And you're using your study to say, with weak triggers at a fib, this area is more likely to reverse the market. Is that fair, Jen? You're taking everything that you know from the high probability trend trade and you're starting to pump it into another trade. Jen is saying large chart is slow, small chart is fast. So when these small triggers roll up right from that termination, when these large triggers roll up right from that termination, my small chart is saying, small chart says, yeah, this looks like a, whoops, this looks like a solid bottom could form. Hasn't formed yet. Large triggers are still down. Jen says, wait a second. That's odds favorable momentum. That's strong triggers on a small chart. And she takes what's called a momentum entry. Market pulls right back to the mid-band, right at the small triggers, creates an opportunity for a low risk. Let me see if I can get in at the bottom. And Jen, you did it perfect. If it gives you 2 down bars, guess what? It's not working. There's your management. But that's the look. And it goes right up to trouble. Really, really great read. I just wanted to take it and I wanted to go back to these 3 things. So I probably made it more of a lesson than some of you needed it to be. But I'm trying to stress today that if you let everything revolve around momentum and path, it makes life just a little bit easier. All right, Pete. Momentum weakening? No. Momentum is gone. Momentum is gone. Not weakening. It weakened here. It went away here. 3 triggers through. Guys, it takes very often momentum to break areas. So if you're looking at 3 triggers through an area, but there's no momentum to push it, the likelihood of it just breaking clean goes down dramatically. There's another divergence. Absolutely no triggers inside. And look at that. There's that odds favorable momentum against it. Pete gets in when it starts up, manages super, super tight, makes his $100, protects himself. Guys, there's really nothing good about that large chart. Honestly, there's not a whole lot good about that small chart. This is, you have to go through it. We're going to do it because this is what we're doing today. And not knocking Pete's trade. Pete's trade is Pete's trade. Pete's a big boy. He makes his own decisions. If you're not at Pete's level yet, I hope that you said, I don't have momentum. My path isn't clear. And son of a bitch, I can't define an entry area. And something in your head say, why would I take this trade? Something in your head said, why would I take this trade? There is nothing good going in my direction. Guys, this turns into, this is where I lift you back up, Pete. I have the experience, the reps, and time in the market to see small opportunity inside of failure. And I think that's one of the best ways to define it. I see small opportunities inside of failure. And guys, there are people that with this look on the large chart trade the short back to the mid band. Fights everything. But they understand the pattern and they do it. So it's not right or wrong, it's just Pete's, right? This is against everything. And then Pete right here where everything rolls up, Miss Jen, there's your snap back to the area with the large triggers vertical. Do you see it? That's a continuation. If you don't want to sit through the shenanigans, that's where everything agrees again. And that becomes a pretty easy look. Isn't that awesome? Or with everything railing, you jump in, past the divergence, and you chili dog that mofo up. Did you catch that one, Jen? Did you get the chili dog? Or were you too busy listening to me talk about your charts? This has been a fun class, guys. So at this point, Jen, you're strong trending. Does that make sense? 30 bars in the same direction, absolutely no momentum. And then Jen, let me show you something that got me a lot. So I want to share it with you. Whoops. Small's inside of the large, right? Does everybody see that? The small triggers inside of the large triggers. That's not momentum. That's anything can happen. That's weakness. I can't take a momentum trade with this. Jen, did you notice that your large triggers, golly, I keep doing the wrong one. And I just said golly like I was in Leave It to Beaver. Did you notice that your large triggers were down here? That you did have odds favorable momentum on the small chart? This used to kill me. I was like, oh, my small triggers aren't outside of the large triggers. And I forgot that these synthetics are from the other time frame. So over here, we have that strong trending market. Over here, we actually do have odds favorable momentum. Jen, I missed that for what I would say was at least 2 years. Because if you take the synthetics off, that's the strongest trigger look ever. We use the synthetics to define trend trade entries, not chili dog entries. It's funny when you have aha moments and you're 6 years in, and you will, guys. I learn stuff every day. It's still a strong trending market. It's still a clear path, and there's still no areas inside of favorable large triggers. But in a strong trending market, you just had one. I love that, Pete. In a strong trending market, there's a lot of people that will trade the midband until it stops working. Some people will get in right at the midband. Some people will get in on a half bar off of the midband. Some people will force a confirmation bar. But when I've got 30 plus bars in the same direction, and guys, do you notice that everything started at a strong bottom? And we said it, if they break that range, it usually runs. So what we can do is say, I have a strong trending market. There's absolutely nothing in my way. If they pull back to this midband, I can either A, buy the midband, and where do I put my stop? I would say force a reversal bar on the large chart. In a strong trending market, I would say force a reversal bar on the large chart. Otherwise, I'm just going to manage the trade. Does that make sense? Because what stops a strong trending market? A reversal bar on the large chart. So we'll see what happens. We'll buy the midband until it stops working, as long as we don't get a reversal bar on the large chart. Are you guys with me on the strong trending market? 30 plus bars, no reversal bar, we are in a strong trend. That's how we defined a strong trend. We define strength within the trend with the trigger lines. We'll define a strong trend itself by how long it has sustained that trend. And 30 bars on a large chart is a lot of bars. So if they pull back to the midband, then we'll be in a long position. If they are capable of giving a reversal bar on the large chart to kill that strong trending market, that's where I'll take my exit. So I'm literally looking at $1,330 worth of risk on this trade per contract. And Pete says, with divergence in the midband outside of the triggers, your rules say wait for a reversal and confirmation bar. So Pete, what's going to have more risk? Entering at the midband, protecting yourself behind the fib, maybe the reversal bar marker, or waiting for confirmation? Sometimes you'll have to play through that. Pete says, I'm going to force him to go in the direction of my trade. That's the only way I'll take it. Some people say, I'll just get in low and risk a couple, and it's worth it to me. Going to just say this. You started looking at the 21.3 crude and added another chart just to see what's happening on it. If there are termination conditions, to be honest, not sure if it's helping or adding another layer of caution. Have you ever done these shenanigans, Mark? Absolutely, Jen. Absolutely, I did. And I'll show you exactly what I did. Let me build a 21 chart for crude here. So let me build a new chart, crude oil, 21.3, Rinko bar. All right, coming up right now, Jim. Coming up right now. No, I like it. And you've met me, right? I will always give my thoughts on it. So Jen is saying, I added a third chart because more is better. Whoops. If two charts can give me everything that I need, well, then surely three charts can give me more than I need. And I'll be more than famous. I'll be infamous. All right, so Miss Jen. We'll do a couple things here. The 21.3 is also in a strong trend. Do you see it? And right at 66.18 are yellow 1-to-1s with every trigger above them. That's pretty good, right? Can we say that this chart supports the strong trend on this chart, which supports the potential entry right at the yellow 1-to-1s with the clear path in a strong trending market? Well, that kind of gives me some warm fuzzies. I like that. What a great use. Does that make sense? It's amazing here. It's awesome here. It's beautiful here. So let's go into the other side of it. Where's my reversal bar marker here? That's what I'm willing to risk. And we'll just let the KISS plan play out. So the other side of it, Jen. Let me find a good example. At 10:30 a.m. yesterday, because that's a big chart and it takes a while. $60.40, $65.40 is where that termination was. $51. Okay, so Jen, Another thing you can do, and we're just going to use the two charts. Your 21 is trading into a termination, right? Textbook, right here, 40, 100% termination on the large chart. On the 21. Same thing on the small chart. You can say this isn't perfect, and even if this one was, do you know how on a 50-50 trade you force your 5-1 to be perfect? So let's circle this tail on a 50-50 trade where the smalls are getting through and the large are not through yet. And over here, it's directly into terminations. It doesn't have momentum. Is this chart going to talk you into trading into these areas? That's usually what happens. Is this chart will talk you into trading into problems on this chart because you'll say things like, well, this has odds favorable momentum. This has a clear path. So therefore, this one has to work. And it just doesn't work that way. And I think I'm rambling. The bottom line is, if all three charts are perfect, it's a godsend. If they don't agree, Jen, your brain is more inclined to believe the charts that will get you into a trade. And that's kind of what I said in a really roundabout way. There's your reversal bar behind it to reduce risk, ladies and gentlemen. Doesn't guarantee a winner. Yep, so the 21-3 terms, not one-to-ones, not divergences, but the fibs are printed on your 13-2. See, Pete just got in. I already made money and went break even. Pretty cool, right? But Jen, this is a good example of how this chart supports this chart and says to me, what a great entry right at the mid-band. Let me get in, let me get paid. Because it's not really high probability, I got paid and I'm break even. I think what happens though, Jen, is that you, I wish I could have found a better example. I'm going to see if I can find a good example. Ooh, let's see if we can use this for the gap theory, Jen. So here's your 21. Do you see how it's odds favorable momentum and a clear path coming from a termination? That's the best look ever, whether it was a 13 or a 21. All right, I'm going to turn this into a gap theory lesson. On your 13-2, that circle is from a bad bottom, pull back to one-to-ones, large triggers are still below the areas. The 21-3 says that you've got a beautiful trend trade. Your 13-2 has shenanigans. So Jen, if you were looking to close a gap or continue with a downtrend from a bad bottom, this supports it. Does that make sense? And then what does the circle look like over here? And we're just letting that trade do what it does, guys. So what does that huge circle look like on a smaller, faster chart? It's like trickle-down economics. So on the smaller, faster chart, the 21-3 said odds favorable momentum. The 13-2 said one-to-ones are likely to stop the market. Jen, you're saying to yourself, I'm not taking this short because this short isn't my best short. Doesn't look right here. Doesn't look right here, but here we go, trickle down. Odds favorable and a clear path from a termination. Pull back to the yellow one-to-ones with all of the triggers miles below. There's your close on the correct side of the triggers. This says we're likely to go down. This helps us define where we're likely to go down from. This gives us an opportunity to capitalize. Odds favorable, potential to break. Pulls right back to the mid band. Triggers aren't following. It's a bad bottom. Once again, Jen, no areas on the correct side of triggers. You get an opportunity maybe, or you find your momentum look that you're learning to help you capitalize on that. So that's one of the ways that you can use the 21. But it's my very humble opinion. You're welcome. It's my very humble opinion. And I guess we'll let that one run. Look at this. And that's right in the way. Here, price traded directly into those one-to-ones, right? So let's put a circle there, or a square. This was a 100% don't take a trade look. On the 13.2, it was weak triggers. So maybe that's a good way to stay patient over here. Pete took it anyway because Pete's a rock star. I have a termination here. I don't have my advantages here. Things aren't perfect here. Let me sit through the shenanigans. And then when they're right, let's have some fun. Because now the 21.3 supports. The 13.2 is strong trending. It pulled right back to a mid-band inside of triggers. It's good across the board. So maybe this, choosing not to trade into terminations, keeps you out of the lower probability trades. And when this is perfect, maybe it creates a little extra courage to hold on to these trades. Pretty neat, huh? But then you have to manage it. I'm going behind this reversal bar. And for me, in a strong trending market, while I love the idea that everything is really nice, 2 divergences on my small chart, especially if the second is lower, is an exit condition for me. Pete, you finally hit your first target. So there's something to be said about great entries. For me, a second divergence is a great reason to exit because then it may go back and retest areas. But until that happens, I love riding this thing. And I'm just going to stay 2 ticks behind the reversal bar marker. It gives me time. Guys, it's fun in the classroom when things do what the indicators say they're going to do. It's fun in the classroom when the trades are working. Some days it's like an ATM. Does everybody understand the concept? In a strong trending market, the idea is to buy the mid-band until it stops working. And it will stop working, guys. Is it okay, because it's not truly momentum, there's no areas inside, is it okay to shortchange yourself a couple ticks and get out at the divergence high? Or do we just say, you know what, they have to go through? Even with weak triggers, they have to go through. Even with one previous divergence, they have to go through. Guys, for me, I'm cool getting out just below it. There's another trade coming. There's always another trade coming. Or I'm cool getting out right at it. I'm not going to force a market without momentum to try to continue up. I might even take it off right there and just get out and say, I'm double my goal today. It's not high probability. I'm losing momentum. It's only a strong trending market. If it comes back to the mid-band, I'll buy it again. We learning anything today, guys? I hope so. That trend trade sure did do what it was supposed to do, didn't it? So let's see what TradingView says about the likelihood of this trend continuing. All the trouble using a 1-minute chart. The overthinking you're doing is on the 21.3 right now. It's a term from yesterday. Maybe you look left too much. Jen, maybe hypothetically, possibly could be, you don't need all that information to be successful. Maybe you don't need a 21-3 to catch a high probability trend trade. Maybe you don't need a 21-3 to catch a 50-50 trade. Maybe you don't need a 21-3 to catch a chili dog trade. So maybe you're thinking about everything instead of what's important. I'm doing great, and all I've taken is 2 high probability trend trades and 1 strong trending market trade. And I'm looking at the same market as you, right? I'm looking at the same advantages as you. I'm trading the exact same plan that you trade. Guys, the extra trades, the extra charts are a way to combat boredom for most of you. I'm not okay sitting still, so I will keep adding charts until I get my way. Hold on. We need another. Because if a 21-3, a 13-2, and a 5-1 are good, what if I got clever and added an 8 range chart too? Because now I have even more information. Now you're good, Jen. I love that you did it. Well, that was so much damn information, it crashed my NinjaTrader. Maybe it is too much information. that was not planned, guys. That was a pretty good lesson right there. I'm a huge fan of the advantages. I'm an enormous fan of having the best of the best, guys. I really am. And I have, Jen, added extra charts. I've added extra rules. I've added extra maybes. And what I've found in the course of my trading life is that the fewer things that I have to think about in a trade, the more success that I tend to find. The fewer options that I take out of the equation, the more likely I am to just take the best trades. Because I really will. If you give me 7 trades, I'm going to focus on the one that, or 7 charts, I'm going to focus on the one that tells me it's okay to get in the market. They may. I think you'll find most people's do. And you know what they say, great minds think alike, right? But fools seldom differ. It's the other side of that one. And guys, there was no reason to exit. I still haven't gotten a close on the wrong side of the triggers. This is just an example. It's okay to get paid. What an awesome class we're having today, guys. What an awesome class. The market is giving you real world, live examples, and everything that we have done today, we have made a point of just talking about 3 things. Oh, Jen, you're so welcome. You guys know I love my job, right? My favorite thing in the world is to see what you're doing and see if I can help. I have made every mistake that you could ever make. I've learned how to correct darn near every mistake that you could ever make, guys. It's my privilege to be able to work with you guys and look at your charts and talk about them. Pete, I heard shut that mouth. Strong trending market. Enter a few bars up because of the divergence. You take quick profits and then you get out on the way down. I like it. I like it. I also like, if I'm going to trust the idea of the strong trending market, I'm going to get in at the mid band. force the reversal bar, and Pete, it's actually less risk. But I know that you like the confirmation. Neither's wrong. He knows that this could be problematic. What a great place to get paid. And Pete, if I can be totally honest with you, I had this aha moment yesterday. We took a trade, and when I was looking at stop placement, the one thing John said that resonated with me, John said, if it's perfect, I'll force the large chart to get me with a reversal bar. And then his rationale behind that was he's like, I could lose 15 ticks twice, or I could lose 20 ticks once. Because if you get the reversal bar, it's game over anyway. And his idea that was that extra 5 or 6 ticks, it was a justifiable risk. It was a justifiable escalation in stop placement because everything is perfect and it's going to take a reversal bar to kill that trend. Does that make sense? Pete, that was pretty eye-opening for me. And that was yesterday, guys. That was yesterday that I got that lesson. So there's your strong trending market still. There's your mid-band. From 27 to 14, it's still about $130 worth of risk. How do we feel about the small chart suggesting that there may be change coming? There's a loss of momentum. There's a loss of momentum. There's weak triggers. Can we say the small chart is saying, guys, it may not be perfect anymore. It's not strong triggers anymore. It's not strong trending market. The small chart says jumping into the mid-band might not be worth the risk. Pete, this is where I like that confirmation bar. This is where I like Wayne's. I'll get in on a half bar up and use this to minimize my risk to see if that strong trending market really wants to continue. Does that make sense? If they can push up right from this mid-band and get me in at 27 and I can have my risk at 20, cut my risk in half. But the small chart said no. Have I ever mentioned that chart reading, guys, is 90% of your day? All right. Steve Diego, took trade based on 5-1 momentum, was apprehensive since small 13-2 triggers were inside of large 13-2 triggers, so exited contracts with 7 ticks instead of 10 ticks. So you took a momentum trade without momentum on the large chart. And Steve mentioned it. It sure does help me. Let's cover all three. Starting with the large chart. Don't have momentum on the large chart. Whoops, wrong one. But you did have a clear path on the large chart. And you're defining your entry by the little snapback to the fib, is that right? You have an entry that fits your rules at 70, right at the fib, right at the triggers. Is that right, Steve? Not the best momentum, but definitely a clear path, and you have an easily definable entry. Okay, so 2 out of 3. You took 7 instead of 10 because it wasn't perfect. So I agree. Manage assertively, right? If you see change, change it. If you get your entry, if you have a clear path, if every indicator agrees, I don't know that 7 ticks makes sense, right? Maybe when you get to 7 ticks, break even, but there's no indication that this trade doesn't want to do everything that you want it to do. And sure enough, it goes all the way up to trouble, which is pretty awesome that it does. I like the way you did it. I like that you took the 7, managed assertively, but you didn't even get a management opportunity. This is scared of losing because you know this isn't right, is my personal experience with me. When I start cutting stops, targets closer for no reason, when I start moving stops arbitrarily without cause, it means that I'm scared to death of the trade. It means that my brain is telling me this doesn't fit your rules. This isn't your trade. This can't be a momentum trade. And that's when that happens. And I know, Steve, because I've done it 1,000 times. So you have to make the choice. Do I want to take fearful trades and mismanage them, right? Is it worth the 7 ticks? It might be, depending on where your stop was, right? Rockstar entry. If you've got 2 or 3 ticks of risk, it makes sense, right? But when I'm fearful, that's when I start changing my plan. So if it's not a rules-based entry, I'll change my management plan out of fear. Um, if I think it's going without me, I might change my entry plan out of fear. And I'm not saying that's what you did, Steve. I don't presume to know whether or not you guys are scared or excited about a trade. So let's look at this one. Weak bottom, but now you have that momentum that you need, right? You've got those strong triggers, but you're sacrificing the path. Does that make sense, Steve? Here you had the path in the entry. Here you have the strength in the entry, but it's not a clear path. All of your triggers are still below resistance. And this one, Steve, you held for the duration because of the momentum. So what can we decipher? When the momentum isn't there, you're fearful of what you're calling a momentum trade. When the momentum is present, your brain says, holy crap, Steve, we have momentum on both charts. Let's ride it. Does that make sense? One of them is a true momentum trade. You held it for the duration. One of them is it's not a true momentum trade. I just hope it goes up trade. Do you see the differences between the two? These are so hard to spot in the moment with the adrenaline. But when you come back and you look at your charts, right? Steve, the one thing that you are ignoring a lot lately is really annotating your pictures and saying, I had momentum on both charts makes me feel good about a momentum trade, and I held to targets. And then over here, not a true momentum trade, not momentum on both charts, scared me, exited early. And if you take the time, Steve, to type that out, to do the analysis, to go back to the 3 things, what happens is you find yourself less inclined to take a chance and more inclined to embrace the good. And that's why I talk about momentum, guys. I read everything on Steve's charts like I get paid to do it. And I even had a good idea of what was going on in his mind. I need Steve to know that this look scares you, right? Because you know it's not perfect, which means you're an awesome chart reader. You manage assertively because it's not perfect. That is smart management. I'm not knocking this trade at all. But if you don't recognize the difference between the two, you'll start to over the course of time. And Steve, I probably gave you more of a lesson than you needed, but it's a good lesson for the whole class. When you have momentum on both charts, you absolutely love to hold your trade. When you have momentum clear path, you get in on the perfect entry. And this one was a little tight, and I think we talked about it a little bit. When it's absolutely perfect over here, Steve, it's okay to give it just a little extra breathing room. And there's nothing worse than getting low ticked. It happens to me all the time. That's one where you can get back in. Use that confirmation bar. Get your money back when it's perfect. Does that make sense? I love this, though. Beautiful momentum. And when it fails, awesome trend trade. And those sons of guns, they got you at 4 ticks. I say 4 to 5 because it's easier on the brain. Guys, I'm almost always in my own personal life when it's perfect. I'm 5, 6, 7. They have to come get me with this look. Great trade, Steve. And I love the double up. With everything perfect, I'll get paid, and then we'll look to get paid again. And then when it comes back, you're like, uh-oh, oh, I like this. That's the one that got you. You try the momentum trade again, and it just doesn't work out, right? You've got it. You've got the momentum. You're above the area. Small's above the large. That's your look. And when it fails, you go, wait a minute. There's that darn trend trade again. Odds favorable, momentum, clear path. I'm going to add contracts. And this time, maybe I'm going to go ahead and leave it, let it breathe a little bit. And you make it all back, all the way up to the fib. Beautiful trading, Steve Diego. And the best part, we're gonna put you on a little pedestal real quick. The best part is this didn't ruin your day and piss you off and make you miss the next trade. You still took them. You still capitalized. You made money on the way up. Guys, losses are a normal part. It's just part of day trading. The quicker you react to those losses, mutter a swear word under your breath if you need to, right? And get back to work. Great job, Steve Diego. Awesome trading. When you know it's perfect, it's pretty easy to hold. When you know it's perfect, guys, you start saying things like, they're going to have to come get me. That's the only way I'll exit this trade. I love it. Strong trending market, 2 divergences, blows right through your mid band. Probably a lesson there. You're welcome. And guys, remember, chart annotation is not for me. I can read your charts. I can read your minds, so careful what you think in my room. Chart annotation is for you. Because when you go back and look at it tomorrow, are you going to remember the emotions? Are you going to remember the thought process? Are you going to remember what you were thinking and seeing? That's what makes it repeatable, guys. That's that recipe for success. It's just repeatability. You're focused on a look, not the money. Great stuff. Awesome class today so far. Did I mention that when you have momentum and path, you're probably going to find a way to capitalize? All right. I'm going to flap my gums just a little bit more, and then it's on you guys. I want to share my personal experience learning the indicators. And this is the experience versus time. This is for you new users. And this is exactly what I did, guys. I got the software and I was excited. And then I realized that I was going to have to do work. I chose not to do the work. I chose to get lucky on simulator and take trades with absolutely no idea why I was taking them. And then I get to this now I get it level, guys. This is where I personally went live with a $6,000 account, and I lost 5,000 of it. I lost 5,000 of it. 21 trades, 2 hours, not one rule met because I didn't have rules met. I didn't have rules. I couldn't follow rules. I didn't have a checklist. I didn't know what I was looking for. There you go, Miss Claire. And guys, this is the biggest kick in the clackers you will ever take as a day trader. When you realize that things didn't go the way you thought they were going to go, right? Every running back that gets the handoff sees themselves getting a touchdown. When they get knocked for a 5-yard loss, they got to work through that, right? They got to say, okay, I need to fix it. Guys, I got blasted down to the I don't know stuff stage. And it was right here, and this is why I like sharing this, guys. It was right here where I was at my lowest, where I wanted to quit, where I didn't want to be a day trader, and I certainly had no aspirations of teaching this class. That's where I committed to this plan. That's where I committed to writing down some rules, having a checklist. That's where I committed to practicing those rules until I was sure that I could follow them. And that's when I made the decision, I don't have to take all the trades everybody in the room takes. Let me take the best trades. Let me learn how to get paid. Let me learn these things, guys. And that is when I started on this. And I'm going to be honest because I believe honesty is important in any business. This is going to do this, and then you're going to F it up monumentally. You're going to get cocky. You're going to believe that your checklist isn't needed anymore, and you're going to take a step back. And then you're going to wait a minute. Let me get back on the checklist, and then you're going to do it again because you're human. And then you're going to go up again, right? And these setbacks get smaller the more confident you are in your plan. Those setbacks get smaller the more you stick to rules. So there is a path, guys. There's a definite path. And whether that is on NinjaTrader or whether you're looking at TradingView, that's crude oil, guys. All the trouble in the world, right at a zone. That's where your strong trend ended. Absolutely no reason to take the trend trade here. Never get a close above the triggers. That correlates with what we're seeing here. The momentum is gone, and it pushes all the way back to Fibonacci support. Jen says, I'm studying this. There's my close on the other side of the triggers. I'm going to see if it closes the gap to those large triggers, because that's that gap theory Mark was talking about. It's counter trend, right? It's against momentum. It's against direction. Hell, I even have odds favorable momentum down. But I've got a reversal bar, a close on the right side of the triggers. I'm going to reduce my risk. And we'll see what happens, right? Cameras in our homes and mind reading. Unreal, Mark. That's what I do. Jen, do you see what we're talking about, though? Price reaches Fibonacci support. Every trigger is a mile above. Large triggers are above the reversal bar marker. That's my loss of momentum. I don't know if it's going to win. It fights everything, guys. This is a counter trend, low probability. I sure hope this pattern works this time. And I believe it was Pete that said this will lose more than it wins. This will lose more than it wins. So Jen, what does your 21-3 say about this trade? Let me get Nexgen Dynamic Rinko. Does the 21-3 say I have a fighting chance? Hold on, we're going to find out. We're going to find out. It's coming up right now. Whoops, I forgot to put a template on it. You say it doesn't help? Everything is up. Pulls back to the one-to-ones. So Jen, strong trending market, right back to the area. Right back to the area. In on the right side of triggers. And you could even say, you know what? I don't even care if it closes the gap. I'm going to try and make quick profits, right? I'm going to see if I can make $100 a contract. On the way up, I'm going to put my stop. If it closes below the triggers, I'll get out. It's worth five ticks to see if it closes the gap. So Jen, you're 21, and I'm beating a dead horse. I'm not trying to talk you into using this chart. Your 21 said strong trending market, pulling right back to the area that could hold. You define the area that could hold on this chart to go with the strong trend, and you wait for a conservative entry over here. You're into the first trouble spot, right? Mid-band's your first trouble spot. Could you just say, and that's probably going to get hit, right? Maybe break even is too soon. Maybe a reversal bar makes sense. So that's one of the ways you can use multiple charts. This says strong trending, all my triggers above the one-to-ones. Well, this supports the idea that support is most likely to hold because of the trigger location. This keeps me from trading directly against the momentum. And because these are moving averages, we'll see if it gets back up here. This is where Ron calls it the pirate trade. with all of these things going on, he says it usually at least makes a reversal bar. That's a Ron C trade. And this is where he writes things in the room like arg. But you see how it's the indicators that give me the reason to enter, guys. And again, you don't have to take aggressive trades. Just an observation. They hit the midband on the small, come back, hit the smalls, and keep going. Let's see. So Jen, you're saying with a termination, with the smalls up, you've seen it where it hits those small triggers right at an area and then continues off the termination? Well, that sure sounds familiar, doesn't it? The challenge with that is Jen, usually that look has odds favorable momentum and happens somewhere right about here. So if you didn't take this entry because it's just way too aggressive, as it comes up, you're going to get that look that you're talking about, Jen. And it's coming from a termination. And it's got a clear path up. Does that make sense? Isn't reading charts fun? It's so much less stress when you talk about this is what's good, this is what's bad, this is what's working, this is what's against it. I'll manage assertively. But the gap theory says don't go short. The termination condition says don't go short. Some of you will just go long. And what we could have done, 16, there's your $100. There's your gap theory. But what's hard, and Steve, thank you for this lesson, when you know you're fighting momentum, when you know you're fighting the trend, right? When you know you're being aggressive on an entry, how hard is it to let a trade play out? How difficult does it become to hold it, to watch it, to accept fluctuations when you know you're being aggressive? The emotions are very different in these type of trades. Jen, I could have went and fixed a sandwich during this trade. Wouldn't even worried about it. Hoping for the area. This one, I want to be a little more in tune with what my chart's telling me. Counter trend, guys. It's the easiest way to drain an account. It's the easiest way to drain an account. Jen, there's your pullback to the small triggers right at the area. You want to see if it saves us? Guys, I don't even have rules for this trade. This is me talking through patterns. This is me talking through what I see. This is an educational room. This is not a trend calling room, a trade calling room, guys. This is putting the stop where the market shouldn't go if this fib's really going to hold, right? This is waiting for a conservative entry if this fib is really going to hold. This is me looking to get paid on the way up to trouble, identifying where bad things can happen, and then deciding whether or not I'm okay with the risk on the trade. That's day trading. Too many what ifs, huh? Yep. And it's hard not to watch every tick. There's a gentleman in this, I don't think they're here today. He says, with weak triggers and divergence, the market loves to go down to the mid-band. Have you guys ever seen this? The market loves to go down to the mid-band and create that big chart trend trade. So you can take an aggressive entry. Jen, you can wait for your momentum entry from the term. Or guys, you can just let it get above everything and continue the look, or get below everything. And Paul, you've seen it bounce up there so many times, but you don't have any rules at the moment. And guys, all we're doing right now in this room is we're talking about every possible scenario we can see on a chart. This is nothing that I've ever taught. This is just using a chart read. If I want to go long, is there a way to not fight so hard on the small chart? If I choose to go long based on the pattern, can I identify areas that may be problematic and manage a little more aggressively? Or you could just do nothing, right, Jen? Because you made all the money up here. And there it goes. Took me right out. Because I had to go counter trend. And now I just gave back some of my beautiful profits. Now I'm feeling a little put out, right? Yeah, Steve, for everybody, they're so much less stressful. There are types of trades where you're down on the day, you go, I need to make money and lose more. Yeah. There's your expectation, right? This is why, in my own personal life, I refuse to go counter trend. Let's see what happens when we have momentum and a clear path in an area inside of triggers. Does that change the dynamic? And I'll say, if I get a reversal bar on the large chart, I don't want this trade anymore. What does that do? It puts me in the retracement zone. It's a decision that I'm willing to make. From a bad top, I do have momentum. My path is clear. My entry was perfect. My first targets are hit. I'm break even. Life is good. Oh my gosh, there might be something too trading with the trend and trading with the momentum. Isn't that awesome? Congratulations, guys. You just undid the aggression by taking the easy one. Do we want to see if they want to retest the fib? Because I've got momentum and path, same way I did over here. I've got absolutely nothing to lose. You guys want to see if they make the run? Or do we want to kiss planet and get out at $300 trade? I'm going to let it run, guys, because you guys aren't posting pictures. So what's good? Momentum. What's good? Path. What's good? Large down, synthetic down, small triggers are rolling. What's the only potential challenge? There's a cute little blue line right here that might create a bounce. I've already been paid. So as we were talking, just had a nice momentum trade on crude, Steve Diego. I don't believe you. Are you saying that with all this momentum and getting below the trouble, you can just make money? Sure. That sounds made up, Steve. Pictures or it didn't happen. Can't believe that for a second. With momentum and path, you found a way to get paid. Poppycock. Do you guys recognize my sarcastic voice there? A lot of times I'm kind of dry. People don't always get it. I love this. I love this new format, guys. This new format makes me so stinking happy. Because it's one thing to look at pictures, right? It's another thing to watch it happen. I've got every stinking advantage I could ever hope for. If I want to get out with a second divergence, I can put my stop right here, or I could leave it at break even, right? Or I could even leave it above the reversal bar marker. I choose to not have any risk on this trade because I've already been paid. And the cool thing is when you grow a little bit, you might say, I'll take first contracts at the first sign of trouble when it looks this nice and make a couple extra tick. The new works, Claire? Trading View? You guys want to do it again? Check this out. Oh, my teaching plan. Oh, the new format. Thank you. I was nervous, guys. I was nervous because I just didn't know how it was going to work out. All right, so Jen and everybody, look at the large chart with nothing in the way. So here's what I have to say. On the 21-3, you hit the midband, which may cause trouble if that's when the third chart is causing me a headache. So Jen, you're going to let a big slow chart talk you out of odds favorable momentum and clear path. Thank you for saying that, because that's the problem that we run into. Paul, they either get you or they don't, right? And if they get you, you'll take another one with low risk. And if they don't get you, it's Fibsville, population U. I still don't see anything that says this market doesn't have the desire to go south. Oh, there it is. So what's the goal, guys? The goal is to get paid, right? The goal is to make money. I don't know what's happening because we're recalculating. Could I say, all right, if I get a second divergence, I'll take the exit and just re-enter because it's perfect? And now we just had a fib update. So we're behind a fib. We're behind where divergence would print. Maybe a close on the wrong side of the triggers. I want to lock it in, guys. I want to make money, right? And 85 guarantees me $160 on my second contract, which means that the worst I do on this trade is 260. But if it goes to 55, guys, we're throwing a party and I'm paying for pina coladas. And Victor, it's all right. I'm glad that you're working but still able to hang out. If you were trading the KISS plan, ladies and gentlemen, you already exited at $300. And there we go, I'm out. I have strong triggers, but now I've got that fib update. Do you see how there's only 2 triggers through? Oh, there is 3 triggers through. But there's 2 divergences on a 50-50. Some of you will choose to re-enter, some of you will not. Guys, when I make the easy money, I don't care. When I fight everything and lose money, I'm more apt to break rules coming back into it. Paul says if you go up just a little risk, Paul says, I'll tell you what, if they want to get me at the very top of the range, so I have virtually no risk, I'll take a trade. Is that right, Paul? Paul says, I'm not obligated to get in here or here. This is where they have to come and get me. And Paul probably also says, that's about where I'll jump ship. And then you don't get mad if they don't get you. That's it. Calling your shots. So we're going to trade the Pineski. This works better? Awesome, Claire. I enjoy this. Guys, this is how I trade every day. When you're not sitting in front of me, I talk about momentum and path and define my entry. I talk about momentum and path and decide where my risk is. I talk about momentum and path and decide if it's worth it for me to take that entry or if it doesn't fit my plan. And guys, to be honest with you, this one's far enough outside of my plan, I would choose not to take it. I'm not coming from a strong top. It's only the potential to break. I've already got 2 divergences. I've got weak triggers. I'm okay not taking this trade because there will be more. Because there will be more trades. Paul, I appreciate that. I've been working out, doing squats. Momentum, termination conditions for days. Paul takes the little momentum style, hoping that there is a breakout. Virtually no risk. And if it breaks out, he's creating expectations. Nice annotation, Paul. It's good to see you posting in here. I did. Steve, I made a call this morning. I was like, guys, I've got lessons to teach. Do me a favor. Help me out. Help me out. It's fun though, isn't it? Did you guys ever think that it would be so easy that all you have to do is talk about momentum and path and then make a decision? Nice trade, Paul. Does this kind of clarify or at least help you understand why I appear to be so adamant about describing these two things on a large chart so that you can find an opportunity on the small chart? Don't have a clear path, not a strong top, two divergences, weak triggers. I don't care what this market does. Ladies and gentlemen, according to my plan, that's not my money. Some of you say, I can't wait to take this trade. And Jen, I'm glad that one didn't work. I really am. Look at it in hindsight. So I want you to look at this is what you entered against. It doesn't make sense, does it? Like, just logically, it doesn't make sense. But in the moment, Jen, it sure seems like a great opportunity. That's what repetition does for you. And that's why I am such a fan of getting my ass kicked every now and then, because it reminds me that I'm human, and it reminds me that I can identify advantages so easy, and I can pinpoint entries so easy, and I can get paid so easy if I just let it be right. Awesome. Steve, I think it is too. And for those of you that are new, guys, the challenge that I had, and Byron, you're new, I hope today made a lot of sense for you, is that new users tend to look for the money, and new users tend to believe that when this trade fails, the software must not work. They don't hear that it was counter trend. They don't hear that it fought everything. They don't hear that it hit trouble. All they see is, man, Novak was in the room and he lost. And I shied away from live markets for a long time because of that reason. But when you teach this format, and guys, the reason that I did that is because I felt like I had to keep busy to keep you entertained. And the reality is, trading isn't entertaining, guys. Trading isn't keeping busy. It's counter to everything that you grew up with. Hard work pays. Hard work pays. Work hard, you'll make money. Work hard, you'll find success. Guys, trading rewards the most patient people. What a great class. Let me get you guys today's video. I had a blast today. I hope you guys had fun.